Hi, good afternoon. Uh, we stopped it previous class, uh, and we have covered all the PFCA and BFCA and all the loans, and we need to cover inward investment account, right? So let's start from inward investment account. Uh, so this account is important if any investment to be made in Sri Lanka. The IIA account need to be open. That is inward investment account, IIA stands for. So who are the people eligible to open IIA? Any foreign national, whether they are in Sri Lanka or outside. Uh, Example, if an Indian doctor working at Lanka Hospital, I think we have taken the same example for you to better, for the clarity purpose. So if a doctor working here as a non-national resident here or any foreigner, then Sri Lankan dual citizen resident in or outside Sri Lanka. Sri Lankan dual citizen mean they have the citizenship in a foreign country and subsequently they acquire the citizenship of Sri Lanka. Whether they remain here or outside, they are also eligible. Sri Lankan national who have obtained permanent residency. Yes, anybody who has taken the PR or changed the citizenship for any other country also permitted to invest in IIA. A Sri Lankan national citizen employed, there it should be read as Sri Lankan citizen employed abroad. So the national word, you need to cut it off. I purposely put it for you to identify any mistake in the slide. So the national word should not be there. It should be a Sri Lankan citizen employed abroad, resident outside Sri Lanka. That means anybody working abroad can open II. Then a company incorporated outside Sri Lanka, yeah, company also permitted. Even a partnership outside Sri Lanka also permitted to invest. Then the country funds, regional funds, mutual funds, all these funds, including unit trust funds, incorporated outside Sri Lanka or established outside Sri Lanka also permitted. So you can see a variety of investors have been permitted to make the direct investment in Sri Lanka, including individuals, including entities, including funds, right? And the administrative executor comes in or when there is a death of the account holder, right? Then a receiver, in the event of a liquidation of a company, a receiver or liquidator will be appointed. Even those people are eligible to maintain the II account until the liquidation process is over, right? So opening and maintaining the account, IIA may be open as a savings account or a current account without the overdraft facility, and it could be even term deposit in designated foreign currency and Sri Lanka rupees. So that is the advantage as far as the investor is concerned. The IIA could be maintained in Sri Lanka rupee as well as foreign currency. So initially, when this account came in the form of security investment account (SIA), it was only confined to LKR. Then subsequently, they changed it to foreign currency because some of the investors prefer they maintain the investment in foreign currency, so they will not subject to exchange rate fluctuation, right? So that permission, that facility is also now given to the investor to maintain the IIA account in the form of foreign currency. Then IIA may be held as a joint with another eligible person. So IIA could be maintained as a joint account with another eligible person. So that is also possible with immediate family member. You know what is another eligible person with immediate family member? You know the meaning of immediate family member by now, right? So it is spouse, parents, and children, right? Bank shall ensure that all income and capital proceeds investment are credited to the IIA through the. Yes, bank must ensure any credit that comes to IIA can be credited subject to verification. The initial investment have been debited to the IIA account. So the IIA credits can only comes in whenever IIA original debits have gone through the IIA. So the bank has the responsibility to ensure whenever local credits are coming to IIA, it is not possible to bank to credit that unless they verify the original investment also linked to the same credit had been made through the same IIA. So that is the obligation of the bank, which is a tough exercise. The banks need to maintain these records. So that is the reason when you maintain IIA account, keeping the records is one of the tough tasks. So you need to keep all the records intact, so that until sometime the investment may be realized very long period. So you need to, beyond that uh, 6-year period, you need to retain this data. So the bank should be aware of this requirement, right? So otherwise you will find it difficult when the investment is realized later on after a long period, if the original investment records are missing. So you need to be aware of retaining this record of original investment, so that you can verify when the investment realization proceeds or incomes are coming into the IIA account. IIA may be closed after repatriation of so it may be closed only after the repatriation. So when, though it's say only after repatriation, the investor has the option, if you prefer that you want to close the account and open an account with the other authorized dealer, the permission is given, provided the bank whom you open the IIA has to give a confirmation to the new authorized dealer. That is, if a bank, let's say, an investor made the investment through Bank of Ceylon, if the investor intends to transfer it to HSBC Colombo, then it is possible, provided the Bank of Ceylon has to give a confirmation what are the investment outstanding, what are the investment made, all the information of the outstanding investment to the new authorized dealer, which is the HSBC, for the investor to commence the IIA, to continue the IIA with HSBC. That is also possible, provided the pending investment data are given to the new authorized dealer, right? So let us look at all those permitted credits that to come into IIA account. Permitted credits to IIA account. Remittance in foreign exchange received from outside Sri Lanka in favor. Yes. Remittance in foreign exchange received from outside Sri Lanka in favor of the account. So any remittance coming through the banking system as inward remittances can come through IIA. Obviously, that is how you bring the money in to invest IIA. Then you can even transfer from your personal foreign currency account. So you could see the eligibility. If you look at some of the eligibility people, those are people are eligible to maintain a PFC. A Sri Lankan working abroad, or Sri Lankan migrated in another country, even for that foreigner who are working here with a resident visa, even he is eligible to open PFC. So there are funds lying in the PFC account, can be transferred to IIA as a credit, right? And there's a new account called Immigrants Remediable Income Account that we will study course of the today's session. Immigrant Remediable Income is a new account where it was introduced when an immigrant remits his money, whatever allowances is permitted to remit money, there is a distinguish should be made between his assets and his current income. So in certain countries, there's a requirement, the immigrant's current income to be reported separately from his other assets. So when there's a requirement in the country where the immigrant migrated, so the immigrant has to request the local bank, I want to ensure separate account is maintained to repatriate only my income. So this income may be derived from a rental, dividend, interest income, is pension, all the gratuity payment, all that is current income. So those current income can be remittable. If there is a requirement, only this account comes in. Otherwise, this account is not really required. So all the money can be repatriated through the account called CTRA that we will study that. Other than that, this area has come. So from that account also you can, that is a temporary account, all your income going. Even you can transfer to IIA if you want to make an investment. And there is an account called diplomatic special account called diplomatic foreign currency and diplomatic rupee account. These are for diplomats who are having their presence in Sri Lanka. So those people also can make investment into into the IIA. They also can transfer their funds from the foreign currency as well as the rupee account. Or the account maintained in the OBU. If the investor want to make an investment out of any of those banks here in offshore bank unit, if you maintain an account, he could even transfer from OBU account to IIA. So all remember, these are money coming into the IIA in the form of a credit. So where it is coming from, you should know, right? Foreign exchange brought into the investor, even he can bring foreign exchange with him subject to the declaration requirement. I think we studied the requirement, right? Anything more than $15,000 or its equivalent need to be declared at the customs, and less than 15,000 declaration to the authorized dealer. So based on the amount that the investor bringing in, the declaration requirement will be accordingly, right? So that in that declaration, investor can bring the currency foreign exchange form in the note of currency, foreign currency, or in the event of a bank draft or whatever the instrument, provided they declared and bringing in to the relevant people, like exceeding 15, customs, less than 15, authorized dealer, and those money can be deposited to the IIA account, right? Then the transfer to any income or any capital received from the capital transaction Sri Lanka account holder permitted. Yes. So whatever the permitted income that you make investment through IIA account, so that all those income what you made in terms of permitted investment, all those money can come back to your IIA as a income. So these are some of the permitted credits, right? Permitted credits continue in the case of a selling investments. So you while you go through each credit, so shall we have a look at this slide where you will have all those investment opportunities. So let us go through these investment opportunities, then we will move on to the permitted credit. Continuously we will look at it. So you can see what are the investment that have been permitted for a foreign investor. So he can invest in shares which could be listed, unlisted. Listed mean it's a public quoted company shares. Unless unlisted mean it's a private company shares. So shares are possible. The investors to invest in shares, right? And treasury bills they can invest. Treasury bonds they can invest, including Sri Lankan development bonds. Also they are permitted to invest, right? And unit trust, yes. Debentures there are direct debenture. The tenure should be more than 3 years. It could be issued by banks subject to approval, and including listed debenture in the public quoted in the stock exchange. So those debentures also permitted instrument. Deposit in the licensed commercial bank as a fixed deposit. Yeah, it is possible. You can even setting up an office as an investment opportunity. You can even setting up an office in Sri Lanka, or you start a business with other local. So that is subject to, there are certain limitations are there. So these are the avenues for a foreign investor to look into, right? And there is a permission given even to acquire a immovable property from the property developer. So you can buy outright purchase of an immobile property, right? Then there is another investment opportunity, which is I feel the bank should, or should, it's a good way to popularize this kind of investment opportunity, where now the Sri Lankans who are aspiring to or desperate to get in foreign exchange loans, right? So this is one of the best way companies who can borrow loans. uh, Obviously you have to establish the credential of the company. So the companies are permitted. Only companies are, remember, the borrowers has to be a company. It could be a private or public quoted company. They are permitted to borrow from foreign lender. So a foreign lender can open an IIA, and the money can be given in the form of a loan to the company that have been incorporated. It could be private or a public quoted company. So the borrower need to be a corporate uh, company, right? And they are permitted to maintain in LKR or foreign currency the borrowing, right? And also with the recent changes in last year March, even government also can borrow uh, from foreign investor, subject to there are relevant authority. They have to get the permission, and government related organization, all those people, even banks are also supposed can borrow from a foreign investor, subject to there is a relevant authority. You need to get approval. They also can borrow. So you can see the entire portfolio of investment permitted to a foreign investor, right? So you can see from private, public quoted companies there, and the government, mostly government instruments are there. So the investor has the provision the mix of investment. He could even invest in private shares or public quoted shares or including government, right? So he has his own choice to select. If you look at on the security aspect, you might select only the government, right? If he's a person willing to take a exposure on whatever, then he might take private securities and public quoted securities, which is private and public quoted, and he can even buy immobile property if you want to take, or even he can partner with other person to set up office here, business here. Even that is permitted. Of course, there are some limitation exceptions are there when you make, but still provisions are available. So if anybody looking into bring investment into Sri Lanka, these are the investment opportunities, right? So that is what you can look at the permitted credit and debit. This is what we are looking separately, right? So the permitted credit debit also you should know each credit and debit. That's what we are looking at. But you should know any foreigner, any foreign entity, any individual, any over the eligible person, when they want to make an investment into Sri Lanka, it has to come through the inward investment account. So that is what you got to understand when you're explaining anybody querying on this. When they want to make an investment into Sri Lanka, you need to advise them the right path. Otherwise, what will happen if the investments are brought in directly bypassing the IIA, then the investor will have a problem to take that money once those investments are realized. So that is the reason you need to give a proper advice to the investor when they're looking investment opportunities. These are foreigners, remember. Some including Sri Lankans who are migrated, all are there, but they are non-resident. And some of them are even resident here with a dual citizenship or foreigner working with a resident visa. So when those people approaches you, you need to advise them the right advice. So they have to come through the IIA account. Whatever the money they earn, it has to come through IIA so that they will not have any problem when they want to take the money, including income, including the realization of the investment. So that can be taken. So that IIA is the moving vehicle, is used as a vehicle to bring the investment so that you can take the investment also through the same channel. That is what the IIA account, right? So let us go through again to see what are the permitted credit and debit. So you saw the permitted credit, right? All the money has to come by way of inward remittances. Even they can transfer from the account, right? I think we have gone through the first slide. Let us go through. In case of a selling investment made through the same IIA under the regulation, yeah, you can even sell it to the IIA. If somebody wants to buy your shares, a foreign investor want to sell it, there is other investor who want to buy it. So that investor's IIA can transfer to the buyer's IIA to the seller's IIA. So the seller's point of view, it comes as a credit to the seller's IIA. So a simple example, if a bought some shares in Sri Lanka, if a B, also foreign investor, want to buy the same shares, the B also can open IIA. From there it transfers. So the B's point of view is a buyer. He also has to open IIA. So it's IIA to the investment is bought it in. So what happened? From the B's IIA, funds are transferred to the A's IIA. It's a matter of changing name in the Shama, whatever the holding company which they are holding the shares, right? So it's a book transfer from the other name. But here the transfers are taking place. One investor buying shares of the other investor. The both has to open IA. So transfer from IA to IA in settlement of the handing over the shares is possible. Settlement charges under the court order related to capital. So if there is any legal issue with the invested company, if any settlement that comes at the court decided, okay, the investment, the shareholder has to be compensated, whatever the money that funds then come as a credit to the IIA. Claims received by the account holder by the central deposit system. Yes, any claims which the CDS is announced coming through Colombo Stock Exchange, whatever the money they invested is then in dispute. After dispute, any resolution is given by the stock exchange and the deposit system. Those claims can comes as a credit to the investor. These are all invested money, remember, right? Transfer from I think there is something called new account, external commercial borrowing account. This is another account where some of the investors who want to lend it to local companies do not want to open an account as IIA. So they prefer to open an external commercial borrowing account. That means they don't like to open an account, and the borrower has to open external commercial borrowing account in order to get that loan purchase. So I will repeat it again. There are plenty of opportunity for an investor to give it a loan to the local companies. But the path they should take, every investment has to come through IIA account. So what happens? Some of the investor, when they are giving loan, not in any of those securities, they prefer to give you a loan to a local company, but they don't like to open IIA. So the permission is given now by the central bank. The borrower can open an external commercial borrowing account, ECBA, and the lender, the foreign investor, directly can send the money to ECBA, right? So there are situations where the lender can open IIA and transfer to ECBA, or the lender can directly send it to ECBA. Either both provisions are there for the lender, because we, end of the day, we want the investment coming into the country. So if there are any reservation, the lender has finding difficulty to open a bank account. Some people do not prefer to open a bank account in other country, but they only can lend it because they feel lending is a good investment for them, rather than keeping their money in their country, because they don't might get very lesser interest, or sometimes countries with a negative interest, they might not get anything. So it's better to give it in the form of a loan to some reputed company, in the form of investment, but they don't like to open account. So there is a provision. They can send the money to the borrower's external commercial borrowing account. So the borrower has to open account locally. The money can directly, lender can repatriate the money directly to the external commercial borrowing account, or even the lender can open IIA, then it could transfer to the. So here, this particular, where it's a settlement. Now, let's say investor bought the money through IIA, he has given to the external commercial borrowing account. That guy is now settling the loan. The borrower is settling the loan. Then it comes as a credit back to the IIA account, right? So it is a recovery of the loan taking place, right? Then if you keep your funds in the IIA account, you are eligible for interest. So that is interest also credited to your account, right? So these are some of the permitted credits. Then transfer as a repayment of a loan granted under the regulation. Yeah, you can transfer as repayment of loans granted under the regulation provision. Licensed commercial bank, yes, you can uh, as I told you, you can we are licensed commercial bank and licensed specialized bank, or the government or state. So when they are borrowers, when they take the loan from the investor, they can under these regulations, they can repay the loan, right? So as a borrower, they transfer as a repayment. So the repayment of loans, the investor has given a loan in the form of investment to the government organization, including banks, commercial banks, specialized bank, and now the bank has to repay the loan. So it will come as a credit to the IA account holder, right? Right. Transfer of the migration allowances or current income from the capital transaction. Yeah, transfer of the migration allowance. We will study migration allowance also. When they are immigrant, when the Sri Lankans are migrating, those people also can take the money outside. Instead, they also can transfer from the eligible amount to invest here within Sri Lanka, rather than taking money over there. So they can invest here. So those same account holder, if the account holder, the same person, say Mr. X, a Sri Lankan example, right, is migrated. So he has certain amount of money, he can be take it out of CTR account, capital transition rupee account. We will study from that account only he can take. Instead of taking, he can even put it to the IA. He is eligible totally. He is a migrant. Now he's in another country. So whatever amounts is legally can be taken from Sri Lanka, he's put it back to his IA account as an investment. So that is also possible, right? Transfer migration allowance as a current income. Allowance or current income, including current income also possible. So you know what is current income of the immigrant, right? So pension, and any shares dividend, or any rent amount. If he has a property, mobile property, he can get the rent, and he draw pension, right? EPF, ETF, all those are income, right? So those income can be invested in the form of investment through the IIA account. So those money, without repatriating, you can put it back to the IIA in order to invest, right? Where the account holder is a non-national resident in outside Sri Lanka, where the account holder is a non-national, you know who is non-national, right? Resident in outside Sri Lanka. Non-national mean a foreigner, maybe in Sri Lanka with a resident visa, or he may be totally a foreigner outside, right? So those people, any income or any capital proceeds received from capital transaction undertaken by the account holder while being resident in Sri Lanka, utilizing funds. Yeah, suppose say an Indian doctor working, so he has a salaries, income, all that, right? He's a non-national with a resident visa. He has all these income, salaries, and he can transfer, put it back to the IA as investment, right? So he can put it back to the as investment, right? And transfer 30,000 per capital transaction Rupee account of the, yeah. So there is a provision where certain transaction, which I will explain to you later on. There is a restriction of taking $30,000. There is a limit imposed by a regulator, because in under migration allowance, your income, your annual allowance of 30,000 is decided by the central bank. So that is the reason that 30,000 per annum from your capital transaction, which is your migration account, capital transaction Rupee account, from there you can take annual allowance of 30,000. So that annual per annum, you can see per annum is there. So that per annum allowances will be also repatriated as a credit to this account. If you are eligible to take 30,000, you, even without taking that 30,000, you can put it back to the IIA as an investment. So that also comes as a credit to the IIA. So when we learn under migration allowance, we will have a more details of the $30,000. Right, permitted debits to IIA. What are the permitted debits to IIA? Disbursement in Sri Lanka Rupee. Yeah, when you want to make any payment within Sri Lanka, it has to be, even though you IIA in foreign currency, you need to convert and pay local disbursement, right? Local disbursement means if you require anything, you want to pay something as an investor, you come to Sri Lanka, but you don't have any rupees, so you can ask the bank to convert certain amount into dollars. In you have IIA in foreign currency, you can ask the bank, I want $1,000 to be converted in rupee. Yeah, you want to spend locally, so local disbursement has to be done in rupees. Any outward remittance favor, yeah, but once you have the investment done, if you want to take it out, it has to be debited IIA. So debit IIA and you take the investment out. So eventually all the investment, once it is realized, the account holder can take it back. That is what comes as a permitted debit, right? So it goes out as account holder after investment is realized. You can even put back to your personal foreign currency account if you feel, right? So personal foreign currency account, or even to IIA of the, if you have a different IA, you can even transfer from your personal foreign currency account or IIA, even your diplomatic foreign currency account, diplomatic rupee account, you can put it back. If you are investing from your personal foreign currency account to IIA, you have the option to put it back to your personal foreign currency account. If a diplomatic foreign currency person want to invest in IIA, he can even put it back to diplomatic once it is invested with a capital gain. So that is the reason you could see all that came as a permitted credit. We saw all these accounts were involved when it comes to permitted credit. So all that is getting involved when it comes to permitted debit, because those investments are realized, and with the capital gain, it will transfer back to the account which is came from originally, right? So those are the accounts: personal foreign currency, diplomatic rupee, diplomatic foreign currency, account maintained in offshore of the same account holder. Remember, of the same account holder. It has to be same account holder, right? If the same account holder want to make an investment, right? Transfer of proceeds of the loan granted under the regulation of the provision of the foreign exchange licensed commercial bank. Yes, so uh, when you're looking at the eligibility criteria, even banks are permitted to borrow, right? So when the banks are permitted to borrow, licensed commercial bank, licensed specialized bank, or government, all these people are permitted to borrow. So as a borrower, so when they want to borrow, the monies are transferred as a loan granted from the investor. So the investor, as a company or a foreign investor individual, they are granting a loan to a commercial bank. As a borrower, they are transferring to their respective account, rupee account of the borrower, right? Then transfer proceeds to loan granted under the regulation of the external commercial borrowing. Yes, you can even, as I told you, you can even open IIA account, won't bring the investment, and you can transfer to the external commercial borrowing account of the borrower. So any corporate, any company incorporated in Sri Lanka is become eligible to borrow. Only companies, remember, partnership individuals are not permitted to borrow from overseas. Only companies incorporated in Sri Lanka are permitted to borrow under external commercial borrowing. So those people are also eligible to borrow, right? So that again comes as a permitted debit to IIA account. permitted debit continues, a payment related. So when you want to make an investment, right? So when you want to make an investment, buying shares, buying all those, you need to make the payment. So I think we saw that schedule, right? Under the permitted credits, debits are there, but we are studying separately each permitted credit and debit. So here you make a Rupee account when you want to make investment in shares, and you transfer the money of the investors. You can buy the shares, you can buy debenture, you can buy unit trust. You all the payment you are making in LKR, in the resident investment. So you are the investor. Investee is where you are invested. So suppose say Mr. X buying the shares of Alice. Mr. X is the investor. Alice is the investee company, where the investor is a foreigner. So the foreigner from his IIA transferring to Alice to acquire the Alice shares, right? So that is the transfer. So it's a permitted debit to IIA. So the investor's account is debited and funds are transferred to Alice Rupee account. That is the Rupee account of the investee. Investee is where the shares are bought, right? And the foreign currency account of the investee. Sometime what happened, like Sri Lankan development bond, central bank is issuing Sri Lankan development bond in foreign currency. And recently, Colombo Stock Exchange also permitted certain, even central bank is permitted, central bank given permission for certain companies to sell their shares in foreign currency. So such investments, there are debentures of certain shares, local company, their shares are designated in foreign currency. So what happened if the investor want to buy that dollar denominated stocks, shares and debenture, even they can transfer direct to their foreign currency account as an investment. So that is where the foreign currency accounts are coming in, right? So if there are examples, Sri Lankan development bond is example, or some of the public quoted company given special permission to sell their shares in foreign currency, including debt instrument, right? An IIA holder, another person seller. Yes, we saw that purchases. You can, as a seller, you can debit and pay as a seller, right? So if you're a seller, you can debit. You saw under the buyer comes as a earlier case. Now it comes as a seller. A business foreign currency account, property developer. Yes, if you want to buy an apartment, as I told you, mobile property is permitted, right? So if the property developer has a business foreign currency account, even you can transfer this business foreign currency account of the property developer. Even that permission, that comes as a permitted debit. Even that is permitted, right? So if you are acquiring a property from a business property developer who has a business foreign currency account, you can even transfer to the business foreign currency account in order to acquire the property, right? An account maintained in offshore unit investee if the investee is exempted from the relevant provision. Yeah, if any offshore units are exempted, even you can invest in an offshore unit also. So that also permitted. So you can see the permitted debits are continue. And one more, the last debit, payment related to investment in shares, debt security issued by company incorporated in Sri Lanka under the regulation provision or outward investment account, the investors. Yes. So here what happened, there are opportunities. You can borrow from a foreign investor in order for you to invest outside Sri Lanka. So what happened recently, central bank has made some restriction where outward investment, you can't make outward investment. Currently it is stopped. You can't, because we are short of foreign reserve. So these accounts were introduced 2017 outward investment account, central bank. When they revised the Foreign Exchange Control Act and revised the Foreign Exchange Act, they give the permission outward investment could be done. During that period, it was okay. But currently, last 2-3 years, we are finding very difficult to retain our foreign reserves. So as a result, these outward investments accounts are temporarily suspended. But they are given an exception where if the investor want to invest outside, if they can borrow from foreign lender and make the investment, then of course this investor can transfer as a loan proceeds to outward investment account. That is what it goes to the investee. So the investor is a foreign investor giving in the form of a investment, so that the local company who is borrowing from the investor can make an outward investment for them to acquire in overseas. So we will look at the outward investment also, but for the moment, let us complete this IIA. So now you know what is IIA. Once again, uh, these are the investment opportunities, right? All shares, debentures, treasury bill, treasury bond. So you can see the ample of investment availability, right? A list of portfolios they can have, right? Immovable property, bank deposit, lending to the company, lending to the government, lending to the commercial bank, lending to any public quoted or private company, all that's are possible. So there it's a list of investment. So this is where the banker should market. So this is the ideal time when we are, so wherever there are investor, potential investor looking for investment opportunities, I would say the promoting a local private and public quoted company to borrow from foreign investors is the ideal tool at the moment, because we need the foreign currency, because those companies are struggling to funding their import export. So this is the ideal opportunity for them to borrow, because there are certain countries investors, if you take some of the European countries including Japan, the interest is negative. So that means the investor there, the keeping the money with the bank, they need to pay, right? Instead, why can't they channel that funds here as an investment? Of course, they will look at the country's perspective, but if they do the risk analysis, still the returns are assured, because there are investment made into government securities. So those returns are definitely guaranteed. So that those kind of investment are the potential investment the investor should look into, right? So there is a plenty of investment. So this is where, as a banker, so this is a good product to market, to safeguard our customers, especially companies can borrow from. That opportunity is there. So this is something that you can tell them. But obviously, the company who is going to borrow has to show their credential to the lender. Bank can't give any guarantees or anything, right? It is the potential of the borrower to convince the foreign lender. That capabilities they should have. Their credential, their financial sound, those need to be established directly by them, direct to the lender. Bank cannot give, or bank cannot undertake as an intermediary to give a bank guarantee to lend this. No, that is not permitted. Those issuance of guarantees for these purposes are not permitted. So it's all depend how the local company convincing the foreign lender to directly borrow from them. So it's very cheaper, because for the lender's perspective, he is not getting anything negative. He has to pay to keep their money. Instead, he can send the money as a loan to the local companies. Yeah, but they know the local companies are doing well, so they can go through the website, and they can go through their annual reports, right? And see how the companies are performing. And the companies also can show their credential, looking at their reports they prepare, investors reports. They can show their strategies, whatever future expansion, and get the loan. So the bank should also inform the company these avenues are there. Why can't they make use of it, right? Then outward investment account. Now IIA we have completed. This is outward investment account. This is where Sri Lankans are permitted. Sri Lankan, when I say Sri Lankan, you could see it is individual, it's a partnership, sole proprietor, companies registered under the Company Act, all are permitted, including, you can see it's going into the next list. EPF, ETF, right? Even those people are permitted. Partnership registered in Sri Lanka, individual resident in Sri Lanka with a sole proprietor. Yes, one and the same person. If X is running a business as a sole proprietor, X can invest as a resident, or even X sole proprietor, that particular business can invest, provided both are same person, right? So all that are possible. So what are the avenues for them? They can invest in shares, sovereign bonds. So let us see what are the investment opportunities. So this is something, remember, though we are studying the outward investment, currently this is totally prohibited. We need to be aware of there is avenue there, because of the current situation. Fresh investment you can't make out of the outward investment account. You can't make any fresh investment, and they are given exceptions. Central bank given exception. If your investment is already made, there are some regulatory payment which you feel, or as I told you, you if you want to make a fresh investment outside, you can borrow from foreign. As you studied under IIA, you can borrow from a foreign lender, and you are permitted to make investment, not from the funds here because we are short of. So there is no way we can convert rupee, and outside investment is the not right time. But exceptionally, central bank given permission if any of the investor has the potential to borrow from a foreign lender, and that money can come here by way of a borrowing, and you can invest here. So that is what we saw in the IIA. Outside investment account, you saw that. That is where, so, right? So that is also one of the opportunities, right? So at the moment, though this product we are talking about, this is currently, this particular product is currently not available for the fresh investment. Only exceptional, you can make an investment. So you can see who are the people can make investment. Individual, partnership, include individual, sole proprietor, individual, a partnership, a company, all these people are permitted, including EPF, ETF, are permitted to make an investment outside Sri Lanka, right? So you can see, I will give you the, we look at the tabulated form and then come, yeah. So you can see here, companies listed in the Colombo Stock Exchange, so that you know that's a public quoted company. So this tabulated form will give you a list of who are the people, eligible people, what are the limitation, and what type of investment they can make. So this give you a very clear picture in brief, right? So you can see one column, eligible resident investor. Who are the people, company listed in the Colombo Stock Exchange? This is public quoted company, right? And there are companies not listed in the Colombo. These are private company. You know, the public quoted company can collect their capital by issuing shares to the general public. Private company cannot collect their shares from the general. They have to run their business within their own. It's generally family businesses, private, or friends and relative run the businesses as a private. So they have to contribute the capital out of their own shareholders. They can't collect it from. So those are called non-listed company or private company. Okay, so you can see then regulated or licensed entities excluding the eligible investor 1 and 2 above other than 2 under the central bank or security exchange insurance regulatory body. So any insurance funds or even those people are even eligible to invest outside Sri Lanka, right? So other than the company incorporated 1 and 2 under the central bank or the Security Exchange Commission of Sri Lanka or the insurance regulatory body, other than, so regulate excluding the eligible investors 1 and 2. Other than that, the people who are coming under the purview of central bank, Exchange Commission of Sri Lanka, then insurance regulatory body, these insurance company, if they want to invest, yes, they can, right? And the banks, yes, they can invest, right? There are certain banks are permitted to make investment, right? This is the new changes, right? This is what they changed in the last year, right? So they have added some more foreign investors to come, including EPF funds. Also, they brought in employee provident fund, also permitted to make an investment because they are also having looking for avenues because they have a lot of collection of funds. They also can make investment outside Sri Lanka, provided the investment has to be very prudent, right? So look at the avenues. They can ordinary shares type of investment. You can see ordinary shares, unit trust, preference shares, corporate bonds, debentures, sovereign bonds. So ordinary shares, you know, if you want to buy Google or Microsoft or Apple, you can buy their shares, right? You can buy the preference shares also. Corporate bonds are issued company, issued by the corporate entities issued bonds, like, and they can even buy debentures issued by these corporate entities overseas, right? Units also they can buy, issued by. And sovereign bond, the bond issued by, like Sri Lankan government issuing treasury bill, treasury bond, Sri Lankan development bond, like why sovereign bond issued by the respective government in overseas also can be invested by the resident investor in Sri Lanka. So these are, and you can see the limitation. If it is a public quoted company, per annum they can invest to $2 million per calendar year, or is equivalent. $2 million is equivalent per calendar year. There is a limit for outward investment. If it is a private company, non-listed company, they can go up to 500,000 or equal, right? So they can go up to 500,000 or equal. There are other entities which are not subject, excluding the 1 and 2, the other categories also can go up to 500,000 per calendar year. So all the investments are focused on these ordinary shares, preference shares, debenture, corporate, sovereign bonds, right? And employee provident fund, again, they also can go up to 500,000 per calendar year. So these are investment opportunities for resident company to invest outside Sri Lanka, right? So at the moment, this door is closed. Exceptionally, if you can borrow and make a fresh investment, yes. If not, there is no fresh investment. Existing investment already you made, yes. There are exceptionally, if you make any regulatory payment, mandatory payment, you have been permitted. As a fresh payment out of converting rupee and making investment, currently prohibited until further notice. Though we are talking about OIA, currently it is banned to make a new investment by converting rupee. Exceptional are there. If you want to make an investment, OIA is possible from borrowed funds from the foreign lender, exclusively to invest outside Sri Lanka, right? And then you are also permitted to make some regulatory payment on your existing investment, where you need to look after some regulatory payments. For example, tax you need to pay your tax, inland revenue you need to make some obligation, company has obliged to pay, or some mandatory to maintain certain capital level in the investee country. So those are regulatory payments. So if you have already invested, you need to look after, you need to protect your investment. So therefore, central bank on exceptional basis given a mandatory payment for the existing investment, not as a fresh investment, right? So, okay, this outward investment further continue. Yes, you can see the partnership registered in Sri Lanka, individual. So those individual or sole proprietor partnership, you can see their limitation is 300,000, not per calendar year, remember, lifetime. Even individual sole proprietor, $200,000 lifetime. So what is the difference between per calendar year, lifetime? Lifetime is its total investment they can make is so much, not every year. So you can see in the previous slide, you saw $2 million, 500,000, 500,000, so everything per calendar year. You can see, yeah, 2 million per calendar year, 500,000 per calendar year, $500,000 or equivalent calendar year. So all calendar year, because these are corporate entities, bigger companies, right? But here, individual capacity, like individual partnership, is a smaller version of businesses. So their limits are limited to 300,000 partnership lifetime, 200,000 individual and sole proprietor lifetime. A company or partnership can set up office. They can have an office overseas, branch office or liaison office. They can start. For that, they can take about 300,000, not lifetime. That is per calendar year, because they need to run the office. They need to run overseas office, right? Yeah, you can have a project office. If you're doing a project overseas, you might have a project office. So that project office has expenses. So that is possible. A partnership or a company only can run. Individuals are not permitted, right? So you can see overseas office. So that is again 300,000 per calendar year. Then licensed banks and the licensed specialized bank, even they are permitted 500,000 to maintain their offices overseas, right, per calendar year. Banks are probably, the bank office are little sophisticated. They want more money to maintain their offices, 500,000, right? Then you can see permitted investment without being subject to any limitation. So you wonder, what is this? We are talking about all investment under limitation. What are these? This is actually, there are, for individual, if you are working for a foreign entity, say you are working, you are as a resident, you are working for a foreign entity, right? As a resident, you have been given certain shares. Some people are working here on behalf of foreign entities. So a lot of outsourced companies are there, they are working. So those employer might give some option plan, share option, that is employee share ownership plan, employee share option scheme. There are two schemes. Generally, these are not similar, slightly different, but both are benefit given the employer to the employee. So one is ownership, mean what happens? The employee will get some shares, any amount of shares he will get. It's ownership they will give. The employee need not to buy. and ownership. So they will actually, instead of, they're kind of a promoting the employee, keep them happy because they have been paid additional benefit, financially benefited by giving some shares to the company, and those shares will retain by the company. When it comes to a retirement, they will get the benefit. That is owned. That is employee share ownership plan. Other one is employee share option scheme, where the employee are given permission to buy shares at a predetermined price. Or let's say if the market share for Google going at the dollar rate of 30, they might give $10 to buy the shares. So if a local investor, a local resident employee is here, want to acquire that, they want to make use of the benefit, because it's a benefit, right? Because the Google share going at the rate of $30, and and local Sri Lankan working for the Google company getting that share at the rate of $15, let's say half a price. So it is a benefit to the employee. So the permission is given to acquire such kind of shares up to the amount they can make investment. So suppose, say, if the Google is giving him 1,000 shares, depending on the experience, how long his capacity with the company, they delegate certain amount of share, and they will be given this benefit to the employee, right? When the current market share is 30, we are giving you as an employee share option plan for you to buy our shares, 1,000 shares, at the rate of $15. So if the employee want to buy the share, he can make an investment. So those are permitted here. That is what you say is employee share option scheme, that you need to make a money. I think the ownership plan, you need not to make a money, because the company themselves allocating certain ownership to you. So you get the benefit at the time of retirement. So it is kind of a motivating factor. Keep the employee retention. These are certain benefit the company want to retain their employee. So the bigger company want to retain their talented employee. This is the way, instead of without giving additional bonus or salary, instead some company may suggest make them also shareholder, so that you will be also working towards your own company. So you also shareholder, you have been given certain option for to acquire your own company shares at a lesser price. So you exercise that right? So you buy that share. Sometime when you acquire share, you are eligible to all the right issue, bonus issue. Then eventually your stock's piling, your stock is accumulating. All that will go up. And later on, if the prices, if your companies are doing well, you will have a larger amount of investment could be coming out of once you sell your shares. Once account whatever the entitlement are sold, you might get a good capital gain. So it's kind of a motivating factor by offering the employee their own shares, the company offering their own shares to employee. So that is also permitted without any limitation. So under ownership, employee need not to make any payment, but of course option, they can buy the shares. The central bank given permission to buy the shares, because anyway it will benefit to the country. The employee, as far as he remain in Sri Lanka, all the sale proceeds will come back, right? So that is the benefit of licensed commercial bank and licensed specialized bank, only if they are investment in banking. So suppose, say, if a bank having a subsidiary with the other banks. So now if you look at commercial bank, Colombo, commercial bank of Ceylon, they invested in Bangladesh. It is kind of an investment, the subsidy investment from other bank, they took over the business. So subsidies were a parent company holding a business more than 51%, right? So that is called subsidies. So suppose, say, Sri Lankan commercial bank acquiring a other bank in Bangladesh, Credit Agricole. So if they acquire the Credit Agricole business, Credit Agricole sold their businesses, commercial bank acquired that businesses, right? So when they acquire that businesses, and the entire ownership, suppose somebody else is also owning certain amount of shares, you get the more than 51% shares, then it will become your subsidiary, because you own control of the business. You become a parent holding company, ownership of more than 51 means you have the holding rights. So that become a subsidiary. So you know the difference between subsidiary and associate company. less than 51 become associate company, or 50-50 may be a joint venture. So this is how the investment generally defined, right? You will have a associate company less than holding of shares less than 50%, and the subsidiary company holding more than the control power. As a parent, you have a control power. So the commercial bank holding a lot of branches in Bangladesh of Credit Agricole. So those are subsequently they would have taken the 100% ownership now initially. So when you are investing as a subsidiary, even whatever the branch you want to invest in overseas, that also permitted under outward investment account, right? Okay. So now permitted credits OIA. Yeah. So the OIA, remember, when you want to make an investment outside, it has to be OIA, has to be foreign currency, because you want to remit money, right? There is no point having a LKR account. You want to remit this money. When you want to remit money, money has to go out. So no point having a rupee account. OIA itself is a foreign currency account, right? So rupee proceeds of the eligible investor convert into foreign currency after the investment requirement. So you have been permitted, suppose if you take an example, a individual resident is permitted to buy up to 200,000, right? And if you want to buy the shares, there are requirements, right? Remember, when you make an investment out of Sri Lanka, remember those I have told you, these are the avenues, these are the opportunities, though it's currently stopped. If these restrictions are removed, you are still eligible to invest outside Sri Lanka. But remember, making investment are subject to certain terms and condition, which I don't think I am in a position to discuss here, but I can just brief you, right? So if time permits, let's see separate session. But for the moment, when you make an outward investment, somebody has to recommend you a prudent it is a prudent investment. So there is a requirement by central bank, whenever outward investments are permitted investment, when you are making, there are certain mandatory requirements you have to fulfill before you make the payment, right? One is a recommended chartered accountant has to study the proposal of the investment and recommend, right, whether this is a prudent investment, because end of the day money is going out of the country. There should be some return with a capital gain. It should come back. So there somebody has the capability to analyze your business and give a report recommending that business is viable, or the investment is prudent, right? So that is first recommendation, chartered accountant. Then you will have to get the tax clearance from Inland Revenue. You have paid all the due taxes. There's no pending taxes because you are making investment. Somebody has to say, the tax department has to say they recovered all the due taxes from you, right? And you need to get a clearance letter from Central Bank, Department of Foreign Exchange, that you get a clearance letter that there is no pending allegation against, as an investor, against in your name. Suppose say if you are an individual person, you have violated certain regulation and you have been queried. There is some ongoing investigation is ongoing. So during this time, you can't make an investment unless your ongoing inquiry is over. You have been cleared. Now your name is, there is no pending case against your name. So that is where the clearance letter all about. So you need to get a clearance letter from central bank that there is no pending case against you. Your name is cleared. You are eligible to make investments. So they will say, we have no objection, so and so to invest, if there is no pending allegation against the investor. So that is a called clearance letter. So you need to aware of these requirements. Somebody has to recommend. You need to get the tax clearance. You need to get the clearance letter from central bank. Each and every investment you make, you have to get the clearance letter, remember, right? So sometimes this could happen. Say you have investment, you want to buy shares of 50,000. Chartered accountant has gone through your proposal and he's approved it for $50,000. Because you can go up to 200,000 as an individual resident. So you are going to buy the Google shares, let's say example, right? So your proposal of 200,000, your entitlement, but you are only going to exercise up to $50,000 worth of money you have. So you decided to, I want to make an investment of 50,000 Google shares. That is your total investment. But you will do it pace by pace, right? So you will do phase by phase. So what happened? First phase, what you are doing, you will ask the chartered accountant, okay, get this $50,000 worth of shares I'm going to buy, or you will say I'm buying 5,000 shares of Google, whatever the price. So he will recommend 5,000 shares Google, because you get the recommendation once your total project, right? So once the project is, you are going to acquire so much of shares of Google, you got the project done, recommendation is given. Now, out of that, you get the tax clearance also, right? Now, you decided initially you are not getting the entire quantum shares. You can't buy the entire quantum. You decided you might buy a small quantum which is available in the market. So you decided buy 1,000 shares of Google. So you come to the bank, given the recommendation for the entire 5,000 shares, but initially you are making investment of 1,000. For that, you brought the tax clearance, and you got the central bank letter for the clearance letter at the moment, so that 1,000 payment can be done, right? And when you want to make the balance payment, there is no recommendation required, because you already got the recommendation for the 5,000 shares, right? And the tax clearance you need to bring in, because tax clearance is you are going to send other $1,000 or other $2,000. And remember, during this time you have to get the clearance letter once again. The reason is because when you make an investment from first investment to second investment, the duration is 3 months time. So how do we know within these 3 months time the investor's record is still clean at central bank? We never know. So you need to be aware of, when you make an investment as a banker, you also should know as a banker, when somebody making outward investment, the recommendation for the entire project, but the clearance letter, tax clearance letter, and the clearance letter from central bank, time to time you have to get it every payment you make, because it vary, the time difference vary, and this particular investor can get into the bad books of the regulator at any time. We never know. So every time when you make a remittances, though it is within the recommended project, every time when the outward remittance is made, you need to get the clearance letter from the central bank, as well as the tax clearance from inland revenue. So those should be aware of, right? And these are funds you can transfer, permitted credit. You can look at the credit. Rupee proceeds of the eligible investor convert. So you as an investor, if you don't have any other amount, you need to convert your rupee and putting into whatever the amount you want to buy a Google share, right? You have been permitted. You can transfer from your rupee account to OIA to send the money. If you have business foreign currency account, yes, we learned that. Individual also can have a business foreign currency account. They can. Even company can invest outside. Or partnership can invest. So everybody also eligible to maintain business foreign currency. So from that account you can transfer, right? Right. Then remittance as a dividend proceeds, whatever the money that comes, that can come as a credit to, once you invested shares, those money will come as a OIA to a credit to OIA. Transaction of transfer from the other category of account may be permitted time to by central bank. If you keep, if you have, once you remember something that you need to be aware of, when you make an investment outward investment account, initial investment when you want to make it, remember you can't convert LKR rupee and keeping it in OIA account. You have to send it at once. You can't have the investment account credited to OIA just lying there, right? So the bank should be aware of. Suppose say if an investment want to make $1,000 investment outside Sri Lanka, if everything is done, then you convert into rupee into $1,000 and you remit outside OIA through the remit. So the conversion into OIA, remitting from OIA has to be done on the same day. So suppose say if an investor want to remit $1,000, if he doesn't have $1,000 equivalent, he might say, okay, $500 is already there. Rupee money, he can convert. If the rupee amount, he can get $500. So he can't tell the bank, convert this and putting into 500 into my OIA account and wait. I'll get some more money. Then you convert the balance. Then again another 500. Now remit 1,000. No, that's not possible. You need to keep all your money in your rupee account. When that is come equivalent to $1,000, then only you can transfer to the OIA. From there, you can remit the money. So remember, you can't keep the money in OIA without making investment. Once you converted and putting into OIA, the payment has to go. Subsequently, when your investment is made and then thereafter monies are coming as a realization proceeds, that can retain in your account, right? So for which bank will pay you interest. That is what you get. The interest earned out of the funds lying in the account. So that interest meant is once the investment is made and the sale proceeds have come back to OIA account as a credit, right? Yeah, debits are you can acquire shares, sovereign bonds. You can all this investment, payment, all that withdrawal in Sri Lanka rupee, those are permitted. So I think here we complete the session, and we have few questions to discuss before moving on to the other presentation, right? So I think we stopped it last presentation halfway, so we have completed the presentation now. So we have few more questions to discuss. So let us go through the question, right? As per the Foreign Exchange Act, who is not considered as a resident from the following categories of persons? So as per the Foreign Exchange Act, who is not considered as a resident from the following? So you know the definition we studied in the previous session, who is resident, right? So there are so many categories we learn. Citizen of Sri Lanka who process outside Sri Lanka on a student visa. Is he a resident? Citizen of foreign country who are resident in or employed in Sri Lanka under relevant visa. This is the example I quote you, Indian doctor working for Lanka Hospital, citizen of foreign country who are resident in or employed in Sri Lanka under relevant resident visa. All right. Indian doctor working for Lanka Hospital, or chefs working in 5-star Colombo hotels, right? Example. Citizen of foreign country who are Sri Lanka temporarily on holiday. Citizen of foreign country who are in Sri Lanka temporarily on holiday. Okay. Commissioner of Trade, Commissioner of Government of Sri Lanka, resident outside Sri Lanka. What is the answer? Any guess? Any guess? Citizen of foreign country who are in Sri Lanka temporarily on holiday is the answer. Yeah. Because they are not treated as a resident. You know what is resident, right? Resident means the people has to be here more than 182 days here. If they are going out, they have to come back, right? So that is where resident, the definition we learned, right? Okay. So citizen of Sri Lanka who has processed outside Sri Lanka on a student visa, students are resident. Yeah, there's no question. Citizen of foreign country who are resident in, yeah, they are resident. They are with a resident visa, they are working here. Trade Commission of Government of Sri Lanka resident. So any official capacity, though they are working on behalf of Sri Lanka, irrespective of any part of the world, they remain as a resident. So all three categories are resident. Only the category citizen of foreign country who are in Sri Lanka temporarily on holiday. So the foreigners who are coming here, they don't stay here. They are coming on a temporary visit. Now you can say the Ukrainian people have come here, landed here. About so many people are due to the current situation there. They are all on a temporary 30-day visa, temporary resident. They are all treated as a non-resident. They are not resident here. They are all tourists. So those people are not considered as a resident, right? Clear? Question 2. Who is not eligible to open personal foreign currency account, Pfca, from the following categories of persons as per the foreign exchange regulation? Who is not eligible to open Pfca? Citizen of foreign country who are resident or employed in Sri Lanka under relevant visa. Individual of Sri Lankan origin, including a minor who is a resident outside Sri Lanka. A non-national either on temporary visit to Sri Lanka, intending to visit to Sri Lanka. Individual resident in Sri Lanka who earn foreign exchange by. Who is that? Any guess? Any guess what is the answer? Hope you all are there, right? Any guess? What is the answer? Citizen of foreign country who are resident in or employed in Sri Lanka, they are, yes, they are relevant, they are resident, they can open a PFC account, yes. Individual of Sri Lankan origin, including mine who is a resident, yes, they are individual origin of individual can open, Sri Lankan origin can open a PFCA. Non-national either temporary visit to Sri Lanka, I think we saw the NR, NNFA, because you know PFC is amalgamation of few accounts, RFC, NRFC, RNFC, NR, NNFA. These four category people merge and under the Foreign Exchange Act made as a personal foreign currency account. So an individual, the fourth one is the answer, because an individual resident in Sri Lanka who earn foreign exchange, who earn foreign exchange. The fourth one is the answer, because who earn foreign exchange, when somebody earning foreign exchange is not eligible to open PFC, is eligible to open a BFCA. So the fourth category is the answer, because they open a BFC account, right? They are not eligible to open PFC. The answer is BFC. So the answer is, for the question number 2, the fourth is the answer. The individual resident who earn foreign exchange, so they are not eligible to open PF. They are eligible to open BFC. So the answer is fourth. The last one is the answer, right? Question number 3. A company or partnership registered in Sri Lanka can make outward investment in the form of overseas office. A company or partnership registered in Sri Lanka can make outward investment in the form of overseas office. I think we saw that. What is the maximum amount of investment could be made in this regard? US dollar 200,000 equivalent amount or any designated foreign currency for lifetime. 500,000 equivalent amount any designated currency per calendar year. 300,000 or equivalent amount in any other designated foreign currency per calendar year. US dollar 300,000 or equivalent any designation for lifetime. So any guess what is this? A company partnership can have office. I think we learned that in the tabulated form under outward investment. If it is an office, that need to be running office, right? So it can't be lifetime. It has to be per calendar year. So what is the amount? Lifetime will not come, because that is not for one-time investment. It's a running office, overseas office. It has to be second and third, out of which what is the answer? The answer is third is the answer, 300,000 per calendar year. I think we have that answer in the, if you look at the tabulated form, you can see the answer, 300,000 we studied. Question number 4. Sri Lankan individuals and business entities are permitted to make outward investment overseas. Which investment out of the below listed in not permitted as well? Sri Lankan individuals and businesses entities are permitted to make outward investment overseas. Outward investment overseas. Yes, we saw that. Which investment out of the below listed investment not permitted? Ordinary shares they can buy, debentures they can buy, corporate bonds they can buy. Yeah, they are not permitted to buy immovable properties. Outward investment you can buy all first 3: ordinary, debenture, corporate bond, but you can't invest in immovable properties. No, that is not possible, right? The answer is immovable property. Okay. So let's move on to the question number 5. Sri Lankan resident outside Sri Lanka on permanent resident PR in another country. An individual who have obtained dual citizen in Sri Lanka, irrespective of the residential status, have been permitted to borrow from banks in Sri Lanka for particular purpose. Sri Lankan resident outside Sri Lanka on PR in another country, and individual who obtained dual citizens, irrespective of their residential status, they have been permitted to borrow from Sri Lanka for a particular purpose. Can anybody? What is that purpose? We saw that purpose. Can anybody? What is the purpose? What is the purpose they have been permitted to borrow? What is the purpose? To acquire residential property. Yes, we saw that, right? To acquire residential property. To acquire, it is to acquire, renovate, develop, to acquire, develop, to acquire, stroke, develop, stroke, renovate, stroke, construct a residential property. That is the purpose. Huh? It is to acquire, develop, construct or renovate a residential property. When loans are granted in this regard, there are 2 different types of accounts are acquired. I think we saw that 2 accounts, right? What are the names of those 2 accounts? What are the? One is foreign currency loan account, yes. FCLA, you would have learned that FCLA, foreign currency loan account. Other one is LLA, LKR loan account. Yes, foreign currency loan account, which is FCLA. Other one is LKR loan account, which is LLA, right? A small case study. A foreign corporate entity wishes to make investment in Sri Lanka and wants to find out the following. A foreign corporate entity wishes to make an investment in Sri Lanka and want to find out. A foreign corporate entity wishes to make an investment. So you know it's a IIA investment, right? Make investment in Sri Lanka and want. What is the appropriate bank account to be open to facilitate investment? Yes, no question. It's very simple. Inward investment account. The answer for the first question is inward investment account. Then they asking name 4 type of permitted investment directly with the involvement of the government of Sri Lanka. Yes, we saw the tabulated form. What are the investment for the foreigners to invest in Sri Lanka? Name 4 type of permitted investment directly with the involvement of government of Sri Lanka. What are the 4 type of investment? Yeah, treasury bill, treasury bonds, Sri Lankan development bonds. Treasury bill is one of the investment, how much is short term, 1 year, long term treasury bond, then Sri Lankan development bonds, then loans to the government and government related organizations. So subject to the relevant ministry approval. Loans to the government and the government related organization subject to the relevant ministry's approval. So it's possible, an individual to invest in a foreign investor can make investment. We saw the list of investment opportunities. Out of the investment opportunities, they're asking what are the directly related to government investments. So treasury bill, treasury bond, Sri Lankan development bonds, and loans to the government with the relevant ministry. So those are the 4 type of investment a foreigner can make directly with the government. Then the third question, what are the investment opportunities available with the private sector? Private sector, you have ample, right? Shares, ordinary shares, debentures, unit trust, yeah, ordinary shares, debentures, unit trust. Even you can buy immovable property from the private investment, immovable property put by the private sector, immovable property, right? And also you can make in the form of a loan to the companies incorporated in Sri Lanka, loans to companies. So those are the investment opportunities. You can buy, you can acquire shares, you can acquire debentures, you can acquire unit trust, you can buy all these securities, unit trust, debentures, shares, immovable properties. Even you can lend to the companies incorporated in Sri Lanka as a loan. So these are investment opportunities related to private sectors. How can the investments proceeds, including capital gains, could be repatriated to the foreign investors? Yeah, the investment has to be channeled through the IIA. So all the permitted investments, all the permitted investment, need to be repatriated. All the permitted investment need to be channeled through. All the permitted investment need to be channeled through IIA account. IIA account need to be channeled through IIA account. IIA account and such investment can be repatriated through the same IIA account. Such investment could be repatriated through the same IIA account, right? Such investment could be repatriated through the same IIA account. Okay. So we have completed session 5. Can you see the screen on the session 6? Can you all see the learning objective? Can you all see? Somebody can say yes or no. You all can see the learning objective.
Yes, sir.
All right.
Can see.
Okay. So the learning objective for the session 6. So we have completed session 5. Now we are moving on to the session 6, which we are going to learn. There again, you can see the same title I have given, an overview revised liberalization foreign aid, because there are so many regulations, because they are entire foreign currency account have been revised. When they revisit last year March, they are revised all those. So you need to be aware of this learning objective, also very lengthy, because we are covering so many accounts, right? So it's not simply I can say permitted credit and debits. It won't make you any worth, right? So it has to be, you have to carefully understand each account, right? So here the learning, we are again going to see some more accounts, different type of special rupee account and special foreign currency account. So okay, so we are going to look at the special rupee and special foreign currency account. Understand the different purposes of each rupee and foreign currency account are open, and its eligibility and permitted transactions. So we are going to understand what are the different purposes each accounts are open. Permitted migration allowances and current limitations. Yeah, we are going to look at permitted migration, because we are going to look at certain account migration. I think I told you we will study, that is what we are going to study, permitted migration allowance. The set of procedure to be followed to remit migration allowances. Yes, we will see what are the procedure migrate, because this may be when you are working in a bank, this may be the question. Everybody now looking for an opportunity to go out of the country. So there is potential people might query on this nowadays. So if you are working in a bank, you might get a lot of queries where we intend to migrate, or subsequently, what are the procedures? So you should be aware of to answer those such queries, right? Understand the special type of account introduced to increase the foreign exchange inflows and it keeps. Understand the special type of account introduced to increase the foreign exchange inflows. So let us see what are the account, what is the special account that was brought in to increase the inflow into the country, right? So learn the foreign currency borrowing opportunity. I think yes, the external commercial borrowing we will learn. So we will, let us look at these are the objective. End of the session we should have this objective. So opening and maintaining special rupee and foreign currency account. So we are going to look at today. I think previous class we learned business foreign currency account, personal foreign currency accounts, and the loans facility associated with such accounts. Then we also look at IIA. Also we look at OIA. So you covered that. Now we are moving on to special type of account, which are for a specific purpose, right? It could be rupee account, it could be foreign currency account. So let us look at capital transaction rupee account, CTRA. You call it as a capital transaction rupee account. Then you have account called non-resident rupee account. This is a new account brought in. There is another new account brought in, immigrant remediable income account, right? So let us see. Then diplomatic foreign currency account, that is only for diplomatic people. They are permitted to maintain both currencies, diplomatic rupee account as well as diplomatic foreign currency account. Then you have external commercial borrowing accounts, ECBA, which I told you, when a foreign investor want to lend it to a local company, they don't prefer to open an IIA account. So therefore, all those borrowers who are eligible, companies who are eligible to borrow, have approached central bank and say these people having their reservation. The foreign lender willing to grant loan to the local company, but they don't want to open account because some company or some foreign individual has the policy. They don't like to open account in other country. So there will be so many issues crop up, right? So they don't like, but they prefer to lend it to the local company. Then the central bank thought, okay, there should be way out to do that. Then what happened? The borrowers are permitted to maintain an external commercial borrowing account with the bank. So the loan, whatever the loan that comes in, the bank will have a monitor mechanism. So earlier bank didn't have that. So central bank brought that external commercial borrowings account, introduced that account so that the lender need not to open IIA. Still, if the lender prefer, he can open IIA and transfer to ECBCA. That's no question about it. Lender has the option to open an IIA account and lending it to ECBA is possible. If the lender prefer, he doesn't want to open IIA, he want to directly send the money, that also possible, directly send it to ECB. So the borrower has to open an ECB account, right? Then we can also see special deposit account. This is the account I think we were talking about to attract more inflow into the country. This is the account we are going to talk about. We are going to learn about, right? So, okay. So for this purpose, before we move on to the direction, there are a few things you need to know. What is capital transaction? Without knowing that, if I go and say capital current, you might not wondering what is the meaning of this, right? Capital transaction means transaction which is not current transaction. You know what is current transaction. If the transaction related to goods and services, we presume this is a current transaction. Or we said any transaction without the movement of assets is current transaction. Now, once you know the current transaction, they define capital transaction as means transaction which is not a current transaction will be treated as all capital transaction. If the transaction is not a current, then within the meaning of Foreign Exchange Act, all the transactions are considered as a capital. So eventually it's a movement of assets. When you say asset, it could be real asset, it could be financial asset. When you what is real asset, it's you can see tangible assets like land, immobile property, or a real asset. Financial asset, it could be securities, it could be intangible assets or tangible assets, right? So you have patent right, you have copyright, you have investment in treasury bill, treasury bond, all that, debentures, all that is financial assets, right? So everything put into its assets, right? That is a capital transaction. Assets mean, yeah, you can see movable, immovable, or any class or discrete. It could be movable, immovable. Yeah, asset could be movable or immovable. You can simply say immovable, you know, land and building, right? Movable can be vehicle and computer software and your financial instruments, all that security, treasury bill, treasury bond, shares, preference shares, right? Any of your financial instruments considered as a movable, right? Including your vehicle, computer, software, all that is movable, right? Your stocks, you can write a plenty, right? Immigrant mean individual Sri Lankans who have obtained PR, permanent resident status, or citizenship in another country. A dual citizen of Sri Lankan origin means at least one parent who born in Sri Lanka. I think I explained. Let me explain again here. What do you mean by immigrant? Means an individual Sri Lankan who has obtained PR. So if anybody leaving Sri Lanka as an immigrant with a PR, permanent resident, you can see people are moving to other countries nowadays on PR, to Australia, mostly on Australia and Canada, on PR. They are going on PR. Some are going on student visa. Some are going on permanent resident visa under skilled migration. So when you go under PR visa, you will be treated as a immigrant, right? Right. So not only PR, citizen in another country or citizenship in another country. That means person who has gone as a PR now taking a citizenship in that country, that person also treated as an immigrant. So it's not the people only going PR. The people who are gone in PR and settled down After some time, they're eligible to apply for citizenship and they change the citizenship. Those people also considered as immigrant, citizenship of another country. Or a dual mean, let me explain what do you mean by dual, right? That I think dual mean a person, say, going on PR, let's say a Sri Lankan, gone into Australia on PR. After some time, he is eligible to apply for Australian citizenship. Then he acquired the Australian citizenship. Right now, he is an Australian citizen. He is no more Sri Lankan. Because the moment you change your PR into citizenship of that country, you renounce the right as being a Sri Lankan. You will be treated as an Australian citizen. But you are one-time Sri Lankan. You are Sri Lankan origin. Still, you are eligible to open a Pfca account. There is no question. You are Sri Lankan origin. But you are no more Sri Lankan. You are now foreigner. So when you come back to Sri Lanka, you can stay on a temporary visit. You can't come with a resident visa because you don't have a visa. You are holding an Australian passport. Your passport is become invalid once you take on the Australian passport, right? You didn't renew your passport because you are gone to Australian passport. Now you are a citizen of Australia. Later you realize, no, I want to get my citizenship back again in Sri Lanka. I want to come in Sri Lanka and spend more time. Then you apply again citizenship in Sri Lanka, right? Then you become a dual. Now you have a citizenship of both countries. Either you can stay in Sri Lanka with your dual citizenship, or you can go back to Australia. Most of the people are having a dual. They can anytime go back to their country, but they are in permanently in Sri Lanka with a dual because you need to get a dual citizenship. Otherwise, you can't remain here. Because that is because you have taken the citizenship in Australia. If you are holding a permanent resident passport of Sri Lanka, if you are PR of Australia, you can come back to Sri Lanka at any time and remain here forever. No problem, because you are holding a PR, but you are holding a Sri Lankan passport. The PR is embossed in your Sri Lankan passport. So you become a PR of holding a Sri Lankan. As far as you have the Sri Lankan passport revalid and valid, you can come to any time Sri Lanka can stay. The moment you change your passport into Australian, then that considered as a citizenship. Then you are no more Sri Lankan. Then if you want to subsequently, if you want to acquire, then you will become a dual citizen. That is what meaning of dual. So all those considered as immigrant, right? Sri Lankan origin means at least one of the parent who born in Sri Lanka and non-national Sri Lankan origin residing outside Sri Lanka whose birth was it's something like this. One parent, what do you mean by one parent is, let's say Sri Lankan person is a Sri Lankan. He married to Australian lady, go on to PR, and he married to Sri Lanka Australian lady, and they are living there, and they have a son. At that son birth is registered in though he's Australian, if the son birth is registered in Sri Lanka, because simply his father is a Sri Lankan origin, he will be considered as immigrant, right? That is what it means, right? One of the parent is born in Sri Lanka, that means the husband is a Sri Lankan, then the child can be considered as an immigrant, provided his birth has been registered in Sri Lanka, including minors. Yes, that is immigrant, right? What do you mean by temporary resident visa? Means visa obtained by citizen of Sri Lanka, which falls under the category visa that entitled. I think what is temporary resident visa? If you look at Australia, there are people who go there, even to Canada, they go on a student visa. Once they go on a student visa, then they can remain there as a after 2 years for your degree, completion of your degree. On that education visa, you can stay there for the 2 years. Then you are become eligible to your visa kind of a temporary resident visa. You will prefer to stay there. Then you will be given a temporary resident visa. So I think most of the people now go for education or work temporarily. They get a temporary resident visa. Or if you have a skill work, and if any Australian company you are working for, you will be given a temporary resident visa to work there. There are some Sri Lankans are working in Australia on TR visa, temporary resident visa. Once you have the TR visa in that country, you will become eligible to apply PR. So those people are now moving to the other countries on TR. Whenever the people has the potential to go to those countries to under skill working, you can get the TR visa and go. Then with the TR visa, you will become eligible after some time to apply PR. So that also they are given the definition of person who's going with that visa, temporary resident. So when we are going through the slides, we will come across this wording. That's what I put this wording so that you know what we are talking about. Parent migration scheme, especially when you're working in Canada, Australia, when the children are going there, they can take the elderly parent over there. So that is called parent migration scheme. Especially in Australia, this scheme is very popular. The Sri Lankan who's gone to Australia, they become a PR and they can take their parents. So that scheme means scheme opened by foreign country, enabling Sri Lankan parents of a person who has obtained permanent residency status to obtain to status of such foreign country. So they also can go, if a Sri Lankan gone to Australia and got a PR, he also can take the parents, provided he has to prove there is only child, or if there are two child, you need to prove the both are Australia. There's no problem because 50% they look at parents. Parents mean if 50% of if there are two children, one is Australia, then is 50% is counted. If there are three children only in Australia, then there will be difficulties taking their parents over there because other two children are in Sri Lanka, so they can look after the parent. So they look at it at that calculation, right? So if one child is no problem, if there are two child, still the parent can be taken because one child is there 50%. The other child can be in any. So if both children are in Australia, there is no issue at all, right? So easily those parents can be taken. Still one person is there, still possible. If there are two children, still possible. Foreign asset mean any movable, immovable property outside Sri Lanka. Yeah, foreign asset mean any movable, immovable assets outside Sri Lanka. That is as per the foreign regulations. It's treated as a foreign assets. Diplomatic mission, diplomatic personnel, those two are different. Diplomatic personnel mean a citizen of foreign country represented in the diplomatic mission. So if you say, if you look at the Indian High Commission, the High Commissioner of India is a diplomatic personnel, right? The diplomatic mission will be Indian High Commission. So Chinese embassy will be diplomatic mission. The ambassador of Chinese embassy become a diplomatic person. Diplomatic personnel. So that is the individual who representing or heading the division is called diplomatic personnel. Diplomatic mission is the entity, is the High Commission. US High Commission in Sri Lanka, UK High Commission in Sri Lanka, Indian High Commission, all that offices are considered as a diplomatic mission, right? That is the definition, right? Including, you can say, UN, European Union, all that's are coming under IMF, International Monetary Fund, all the diplomatic mission. That is World Bank. World Bank is considered as International Bank for Reconstruction and Development, ADB, Asian Development Bank, other similar organization, right? All that is, you know what is the diplomatic mission now. What does it mean to you, right? Okay. So let us look at capital transaction Rupee account. It's a Rupee account. So this account is meant for whenever whoever migrating from Sri Lanka, they have to open the CTR account in order to take their entitlement. So this account directly for migration. So this is the Rupee account, CTRA. So who are the people eligible? An immigrant resident in or outside Sri Lanka. Immigrant mean now you know the people who want to migrate. It can be person who has already gone there or got the citizenship or about to leave. Immigrant. They can resident in or outside Sri Lanka. They are already outside, they are already gone, or they are here, they are about to go. All considered as a eligibility. A non-national resident in outside Sri Lanka, including minor. A non-national resident in. So here, a non-national mean a foreigner resident in or outside Sri Lanka, including minor. So even those people are also eligible to open. So if I give you an example, a non-national resident in, who is that example? Non-national resident in. Give an example, non-national resident in outside Sri Lanka, including minor of such person. Non-national resident in. So there could be situation, a foreigner, a Sri Lankan, holding dual citizenship, is a non-national resident, non-national, is on resident, is on dual citizenship. He can be here, he can be outside, right? Even that person is eligible to open, right? An individual Sri Lankan resident in outside Sri Lanka who has obtained temporary resident visa. Individual Sri Lankan resident in or outside Sri Lanka, aged 18 years above. They are here or above outside. They are considered under temporary resident visa. They are also eligible to open CTRA. Individual Sri Lankan resident who is prospective migrant under the parent migration. If elderly parents are there, they are about to leave to their children, they are also considered as a eligibility criteria to open a CTRA account. Administrator executor of the estate of a deceased person. You know what is administrator, what is executor. If a person who is eligible to open a CTRA account, if he passes away, death of him, somebody has to maintain his account. If the person has a last will, there will be somebody nominated in the last will. That person is called executor, right? If the death of the person has some asset and he doesn't have any last will, then the court will appoint an administrator. So that administrator will open the account CTRA until to dispose the property of the deceased person. So that is every account, there will be administrator executor appointed, because what happens if the account holder, death of the account holder, somebody has to run the account, because the account holder is no more. Somebody has to run the account, somebody has to go through the account. So that the permission should be given. The person become eligible after death of the person, or it can be nominee. If there's a nomination, the nominee become eligible person. He become executor. Or the court can appoint other person as administrator. In the event of a company, the liquidator. So these are the people who will continue to maintain such account after death of. In the event of a company, the company is liquidated, insolvent. The company is bankrupt. Then somebody has to run the company. So that called liquidator. So these are the people permitted to open this kind of a continue to account, right? So here the administrator, executor only come, liquidator will not come, because this is an individual capacity account, right? Opening and maintaining a CTRA account. CTRA may be opened and maintained in the form of savings, current accounts, because this is simply to take the money. There's no point term deposits comes here. There's no term deposits. It's a current account or interest-bearing account. It's a savings or non-interest-bearing account, current account. So it's a Rupee account. Remember, it's a Rupee account. Eligible person shall only open one CTRA in the banking system and shall be. So remember, after the March regulation, they have streamlined this operation. So they said CTRA account should be previously what happened, whenever person, say X person got the PR to migrate to Canada. Now, what happened if he comes and tell the bank, I'm about to migrate, the X bank, all the LKR account within Sri Lanka will be categorized as earlier CTRA, because he's migrating. So all his Rupee account need to be redesignated as CTRA. Now, central bank, with the March, they brought another account, which we are going to study, right? So they brought a non-resident Rupee account. So what happened, what do they say is, when a person about to migrate, he can only maintain one CTRA account. All the other account, all his Rupee account need to be redesignated as a non-NRRA, non-resident Rupee account. So that is a new account they open. So you need to be aware of, though earlier we have been studying, before March last year, we were studying, so many people have so many CTRA accounts. All their Rupee account become a CTRA once they decide to migrate. Now, central bank says no, only one CTRA is sufficient for them to take the money. The entire other account need not to be CTRA. It has to be the new account called non-resident Rupee account. So now you know that is appropriate, non-resident Rupee account. So NRRA comes in, right? Okay, so let's see. An eligible person shall open only one CTRA in the banking system and shall be held as a sole account. So remember, there can't be no joint in CTRA. It has to be only one sole account as a CTRA sole account, because migration allowances for each individual person. So you can't be joining that, because you will be losing that privilege of taking money. So you are entitled for each eligible person, right? So always you have to open a single account under CTRA. AD shall obtain registration number. AD mean authorized dealer shall obtain a registration number from Director, Department of Foreign Exchange prior to opening the CTRA. So there is a requirement. When you want to migrate to other country, you can open CTRA account, capital transfer. Through that account only, you can take all your permitted migration allowances, right? Now that account need to be registered with central bank. So it is very simple process. The account holder, the person who intend to migrate to other country, he will come and tell the bank, I want to open a CTRA account. Then bank also knows this CTRA need to be registered with central bank, right? And that there is a requirement. There is a simplified form, a form. That form has to be filled by the person about to leave. The immigrant has to fill. He has to give his name, data, passport, whatever, blah, lot of information about his, right? Then the bank has to fill. So that format, once it is completed, that document will be sent to Department of Foreign Exchange. Then they will assign a registration number, which the bank has to connect that number to the CTRA account, and they keep the central bank informed what is the CTRA account number. Now remember, once the CTRA is registered, all is immigrant allowances, all the permitted migration allowances has to be channeled through that particular account only, right? So only one CTRA account can be maintained, which is registered in central bank, right? So if a person maintaining a bank account come and tell the bank, he has a bank account, about 10 banks account, right? Yes, let's say Mr. X has 5 account with commercial, 2 accounts is HNB, 3 account is Bank of Ceylon. It's possible, right? You have 10 account. The moment you go to a first bank, you tell them, I'm migrating. So the first bank who tell them get the opportunity to convert everything into CTRA. So the other account eventually become a non-resident Rupee account. So those funds has to be transferred to CTRA for you to take it out. So if you are a smart worker in a bank, you can immediately tell the moment you know this person is migrating, you can tell that person, can we open a CTRA, and you register CTRA, so that you will jolly well aware all the other account become a non-resident Rupee account. And that money has to transfer from non-resident Rupee account to the CTRA account for him to take the money out. So the other account funds are there, it will eventually transfer to your CTRA account. So I'm just saying it could be advantage or it could be not advantage, but the person who take the first initiative to register the CTRA, that is the only account he can open, because he can't open any CTRA with anybody. Only one CTRA with 180 authorized dealer, right? Then you can also see AD shall be operated, then both CTRA. Now once you have the other advantage, once you open the CTRA, central bank says there's a new account we are going to study, Immigrant Remittable Income Account, area. You call ERIA, Immigrant Remittable Income Account. Also should be open with the same AD. So you should know, now the moment you open a CTRA, let's say you open a CTRA with Bank of Ceylon, you have other Rupee account with other bank. The moment the Bank of Ceylon made the CTR account with the registration of central bank, if you decide you need to open a ERIA, Immigrant Remittable Income, that is only required. Remember, area is not required every time. It is only required the country you are going to migrate. Let's say you are going to Canada. If the Canada has a policy, the immigrant, when they are getting money from their own country, they need to know what is the money they are getting it. If the money is current income, if the Canada has a policy to differentiate because of the banking, AML, KYC purposes, they know this immigrant getting a lot of remittance from Sri Lanka. They want to know which amount is current income, which amount is assets. What is belongs to him will come back, because the moment he become a immigrant to Canada, the Canada government knows he will be getting money from Sri Lanka. But they also would like to know whether this immigrant getting his assets, selling his asset, getting money, his own assets. That should separately, and his current income should come separately. Then they will have inform immigrant, when you are coming to Canada, you need to show us your current income separately, your assets separately. If there is a requirement in Canada, then this immigrant has to open 2 accounts. He has to open a CTRA and he has to open a Immigrant Remittable Income Account. That is, remember, the area account is only required if the country where the immigrant is about to migrate is a requirement to segregate the immigrant income from his assets. So if the country doesn't have any requirement, the CTRA is only sufficient. So remember, the area will only become a requirement or only become necessary. The country which is going to migrate wants to know the immigrant income separately from his assets. If there is no requirement, let's say you are migrating to UK, there is no requirement. So you only open a CTR. There is no area requirement. You can send everything, your income, your migration, your asset, everything, send it through CTR because there is no requirement. So area only comes in. So that is what there are some requests from other country. When the customer goes to central bank, the central bank aware, okay, there is a requirement like that. Therefore, they are given permission to commercial bank. Okay, if the migrant person want to open a separate account to repatriate his income, open an area account. But remember, once you open a CTR account, the area also should be open with the same bank. So you should know now. Okay, if an immigrant open a CTR with the Bank of Ceylon, the area account also should be with the Bank of Ceylon. He can't go to any other bank. So you have an advantage of by immediately registering a CTRA, the area also will come into you if there is requirement. If there's a requirement, the area also will come to you because both should be open with the one same AD, right? So now it's aware, right? Then look at the last point. All existing CTRA, except the account for which the registration number has been issued by central bank, shall be redesignated and continue to operate at a NRRA. This is what I told you earlier. Once you know you are migrating, if you have 5 accounts with one particular bank, you don't have any other bank, you have only 5 accounts with one bank, all your 5 accounts will become a CTRA till March last year. After this March regulation came, central bank says no. All the 5 accounts except one account, all 4 need to be non-resident Rupee account, NRRA. Only one account need to be CTRA, right? So now you know, okay, if a person about to migrate, having so much of LKR account, when he approached the bank, want to take the money when he migrating, only one CTRA need to be open. The rest of his all the LKR account need to be converted into NRR. In addition, if you want to make his income remittable separately, then immigrant remittable income account he will open. That all depends the country where he is going to migrate. If there's a requirement in that country only, he has to open. If not, CTRA is sufficient. Is that clear now? So you will have only CTRA, one account. All your remaining account when you're migrating will become a NRRA. The area will only comes in when there's a requirement. So, okay. So I think probably you really required a break now. So we have continued almost 2-hour session. So what we will do, I think we discussed up to this point. So let's move on to the, I think I have given the registration number so that you know, this is the document you have to send it to central bank to get the registration number. So let us discuss this document after 15 minutes break. So we will meet you now exactly. It's around 3:30. Shall we meet maximum 3:45 or I will give you 5 more minutes. By 3:50 we'll start. Sharp 3:50 will start, right? So see you with a short break. Can you hear me? Shall we start? Can somebody say you can hear me? Can you all hear me?
Yes, sir, we can hear you.
Right, fine. Okay, so we will start because we need to complete this level base to complete this. Okay, application used to obtain this registration number from DFE stand for Department of Foreign Exchange, you know by now, right? So here, this is the form we were talking about. What is the registration number? Once you open a CTRA, you need to get that account registered with central bank. So this is the form format given by central bank. The account holder has to give. It can be CTRA, it can be ERA, Immigrant Remediable Income Account. Both account, same format. He has to write the full name, NIC, personal identification number if he has a foreign passport. Still he can open the CTRA to take the money. He has to give his personal identification number, current passport number, Sri Lankan passport. If he has migrated citizen, he can open the current passport and the Sri Lankan passport number, if any. Date of birth, place of birth, date of obtaining PR, country of PR citizenship, the amount, the account to be open, area or CTRA or both, whatever. Eligible category. So you know the CTRA eligible category we saw the first slide. There are few people who are eligible to open. Under which category this guy is opening. So this has to be filled and the bank will have to be filled. Details of authorized dealer, name, branch, branch address, your email address, name of the reporting officer, they want the name, designation. And once you send the format to them via email, they will, within the 24 hours, they will give a registration number. Probably 48 hours maximum it takes, they will give a registration number. That registration number need to be tagged with your account number. Once you open let's say you have a normal LKR account. Now, once you get the registration number, you will convert the normal LKR into CTRA in your system. Because you need to redesignate that account into CTRA. So once you redesignate it, if your system gives the same number, that number should be given to central bank. This is the CTRA account number. So central bank wants to know, once the registration number given to CTRA, what is the CTRA account number open at that particular bank? Because that is the only account they are going to monitor. Because that guy cannot open any more account with any bank under CTRA category. If you want to open an area, he has to go to the same bank to open area, because CTRA area need to be opened in the same bank. So that is the reason. This is how the transaction is monitored by the central bank, because these need to be monitored by them, because there are amounts going out of the country. So they should know how much is taking under income, how much is taking as a capital transaction, whether he has fulfilled all the requirement, and whether the banks are following what is stated in the direction. So to ensure that this monitoring mechanism is in place, right? All existing CTRA maintained by foreign firms. Now remember, prior to March, all the CTR account, if you look at CTR, can be even a Sri Lankan person when he when he working in Middle East, when he want to open a Rupee account, the bank open a CTR account. When a foreign entity or a registered entity, say a Indian Tata company, they are maintaining a LKR account, even that is CTR account. This is how it has been structured. So central bank says, okay, year in after, other than the CTRA only can be opened by this immigrant. So all other accounts previously opened as a CTR for different category, they said no, we need to change into different accounts. So that is the reason central bank says, okay, you can see all CTRA maintained by foreign firms, companies registered, incorporated outside Sri Lanka shall be redesignated as non-resident Rupee account. All that account become a non-resident Rupee account. So earlier, if you look at before March last year, even a Tata, let's say India, there's a Tata company. So Tata has a Rupee account here. Some old account is maintained with some of the banks, old accounts. Some of the old companies maintaining Indian, Bangladesh, Pakistan. These companies have some Rupee account here. It has been all those days, more than 30-40 years, the Rupee accounts are there for them to make the incidental expenses here. They might have some assets or whatever. They want to make the payment. They open a Rupee account, LKR account. No checkbook, current account. This is a normal account. They have been using this. So that account, whenever the regulation changed, central bank last review, they said, okay, make into CTR account prior to March. Then they March realized there are cumbersome. So they categorize all those accounts now into non-resident Rupee account. So year in after, CTRA is a designated account only for immigrant. Even immigrant other accounts will be categorized as a NRRA. Now, even that NRRA could be opened by foreign entity having a bank account locally also designated as NRRA. So that is what the first point is. All existing CTRA maintained by foreign firms, companies registered incorporated outside Sri Lanka shall be redesignated and continue to be operated as a NRRA. All existing CTRA maintained by Sri Lankan employed abroad. I was just talking to you. That is Sri Lankan working in outside Sri Lanka, Middle East and other countries. Even their LKR account was under the category of CTRA capital because there is no other category account available to open a normal Rupee account. Other than the normal Rupee account, there is no category of Sri Lanka Rupee account could be maintained. So therefore, all the banks are putting into everything into under capital transaction Rupee account, which is Rupee account could be opened for migrants. So that account was heavily used for all other purposes. Now that account is removed, and those Sri Lankan working in other countries can maintain an ordinary LKR account. So that is how it should be. Just because of Sri Lankan person working abroad, you need not go and change the account. So that remain as LKR account now. So you can see all existing CTRA maintained by Sri Lankan employed abroad who are residing outside Sri Lanka shall be redesignated and continue to operate as a Sri Lanka Rupee account. So if just because of somebody going to Middle East, now earlier central bank says, okay, he's no more resident, convert into CTRA. Now that is not required. That account can be maintained as a normal LKR account. If you already, if the CTRA is already, you are converted previous LKR into CTRA, now you reconvert into normal Rupee account. So year in after, the regulation will be anybody who is working Middle East or working in any other country, they can maintain normal LKR account, right? The CTRA only comes in when somebody migrating. That is again only one account. The remaining entire account that particular immigrant has with the banking channel need to be converted into non-resident Rupee account. So now you could see under the non-resident Rupee account category, there are few categories getting into that now. One is immigrant. As an immigrant, other than my one CTR account, all my account will be categorized as an NRR, right? That is one. And the foreign entities registered outside Sri Lanka, when they want to open LKR account, that also central bank says now NRR, non-resident Rupee account. So now for the moment, you know, there are two categories comes under NRR, right? Then AD shall have mechanism to place identify the individual from the registration number. Yes, authorized dealer should have the mechanism to identify the individuals from the registration number issued by the department. So central bank, once you have a registration number with CTRA, you should be in a position to know these are the individuals accounts maintained. Individual CTRA account by looking at the number, right? AD require prior approval of the Director Department Foreign Exchange, closure of CTRA open and maintained in respect of eligible. So authorized dealer mean bank has to get a prior approval from the Director Department of Foreign Exchange before the closure of the CTRA account, right? That is the requirement. Okay. So let us look at what are the permitted credit to CTRA. Now this is the account. Now you know the immigrant, where the account holder is an immigrant, resident in or outside Sri Lanka. That means immigrant, you know the definition. Anybody going to migrate or already migrated, everybody has to open a CTRA now. So if you are thinking of you are leaving Sri Lanka, your account will be CTRA. If a person already left to other country on a temporary resident visa or PR or changed the citizenship, everybody maintains CTRA. So now you know any immigrant mean irrespective of whether he is here or whether he is about to leave or he already PR or he already changed the citizenship, the CTRA is the account. So you know now you have clear definition. CTRA is the only account for immigrant, right? Okay. So remittance in foreign exchange received outside Sri Lanka in favor of the account holder through the banking system. So if any remittances coming to your CTRA account, if you want to make some local disbursement, say you want to make some payment to your mother or father, you can send it to your CTRA account and you can ask the bank to convert and pay in Rupee because CTRA is a Rupee account. So when you send the remittances, eventually it will convert and credit to your Rupee account, right? It's a Rupee account. So when you send $1,000 or whatever, bank will, when they are processing inward remittances, it will be converted and credited to your LKR account. So that will be dispersed locally for your local disbursement. So when you want to make payment within Sri Lanka LKR account, you send the money to your CTR account, bank will convert and credit your CTR account. You can spend that money. So that is possible, right? Then any proceeds realized from any asset in Sri Lanka, including movable, immovable, tangible, intangible, owned by the immigrant. So, any proceeds realized from you as an immigrant, you might hold, including movable asset, vehicle, your computer, all that movable item, right? Immovable, property, building. Tangible mean you can see that you are, right? So whatever movable, again, tangible. Intangible asset, example of what is intangible assets. Can somebody tell me what is intangible assets? What do you mean by intangible assets? You can't see that. What are the assets? That kind of intangible assets, your softwares, if you have a computer software, your trademarks, yeah, your goodwill, right? Your copyright, your licenses, all that, your films, whatever songs you patent, you got a patent, right? So all that is considered as a intangible assets. These are valuable assets, right? So whatever the proceeds realized from this intangible assets owned by you can be credited to your CTR account. It goes as a permitted credit to CTRA. Look at the heading. It goes as a credit. So permitted credit to CTRA. What are the credit that can go into your CTR account? Inward remittances coming in from abroad that you send it to your own account, right? Or any you want to take money through the CTR account, any asset owned by the immigrant. I have underlined it. Owned by the immigrant. That's your own assets. Any type, movable, immovable, anything, you can put into your CTR account if you want to take it out, right? Or any proceeds derived from any asset in Sri Lanka, including movable, immovable, that are inherited by the immigrant. That means you have been given, if you are a family, extended family or family, you have a wealth, you have an assets that have been sold, distributed among 4 children or 2 children. Then your portion come as a inherited, right? So one of the property is sold and you are moving to other property. Let's say your parents are giving a portion of to you. So 5 million or 10 million comes to you, that is being credited to your CTRA because that is inherited from your family. That's the proportion to you as an immigrant, right? Or sometime any proceed derived from any asset in Sri Lanka, including movable, immobile, received as a gift by the immigrant from the immediate family member. You know the immediate family member: father, mother, parents, children, spouse. So that can come as a gift by you, gift by parents. Sometimes parents might gift you, or sometimes your children might gift you, or generally it's another way. Parents give to the children, right? So this is how the property can be gifted. Sometimes people who have some money, they want to sell their old house and gift that money to people who are intend to go out because they don't want to spend here. They will give it them to take it. So they will those credit that fund to their CTR account. So the CTRA account funded by, your own asset, your inherited asset, your gifted assets. All that is whatever belongs to you. Monetary gift received by the immigrant from the immediate family member, being funds realized from any asset, including any monetary terms, any gift, whatever. They have a vehicle, somebody, your brother sold, your father sold the vehicle and given the money to you. Your wife sold and given to you, or father giving it to the children. If the child is migrating, you get it from the father. Okay, so whatever possible way that comes as a one credit to your CTR account. Any income derived from investment owned or acquired or inherited received by way of gift by the immigrant mentioned. So it is again any income derived from any investment owned and acquired, inherited by way of gift. So whatever the investment that have been invested here, that income also can come into CTR account because that is your invested, whatever the money that you invested. So that belongs to you. It can be inherited or it can be gifted. It can be owned by you, can go back to your CTR account. Whatever treasury bill you are invested, or FD you are invested, or you are invested in some shares, the dividends are coming to you. So that can go into your account. It can be gifted by your immediate family member also. That is also possible, right? Superannuation benefit of the account holder, including EPF, ETF, all that money can go into your CTR account. Transfer from a non-resident Rupee account. So as I told you, let's say you have 5 accounts. You have told the bank, I'm migrating. So what will happen? The bank has converted one of your account as a CTRA. All remaining account is what account? NRRA, right? So you want to transfer all the money lying in the NRRA to the CTRA. It's possible because it's your own account. So simply you are telling the bank, I have 5 accounts. I am migrating. So bank has converted one account to CTRA. All 4 accounts will be eventually converted into non-resident rupee account. The funds are in those accounts. You want to send it out. All the NRRA funds can come into this account. So transfer from non-resident rupee account of the account holder. Account holder, we are referring CTR account holder. So the CTR account holder can get it from his NRRA to his CTR account. So all his remaining account will be NRRA now. So if you have 5 accounts, all the 4 accounts funds can come into his CTR account. It's its own account, right? Account holder means it's the same account part, same person. Then permitted credit to CTRA where the account holder is a non-national resident in. Non-national now is become a foreign person. In or resident in outside Sri Lanka, including a minor. Superannuation benefit of the account holder, including employee, provident fund, employee, yes. So if the person become a non-national, migrated to other country, you become a non-national, or the person, let's say, for example, if a person, Indian person working with a resident visa here, is a non-national, but he's on a resident visa. So whatever the terminal benefit, whatever that go into CTR account, retirement benefit, everything. So that is for non-national resident in or outside Sri Lanka. They can be outside Sri Lanka or they worked here, and whatever terminal benefit that belongs to them can go into that account. Any income, any capital proceeds of investment as permitted under heading of A, Schedule 1 of the foreign. So here, remember, Schedule 1 of A, Schedule 1 of foreign exchange classes or capital transaction mean it is a permitted investment. Where we learn IIA, inward investment account, right? If a person invested in inward investment account, let's say, I'll give you an example. Let's say a foreigner invested into IIA account. Foreigner invested into IIA account in some shares. Now, that foreigner passed away. So ES, eventually, the court decides, or the last will, whatever, the entire remaining deceased property should go to the other foreigner. It's a non-national. So the investor also foreigner, his son is become eligible, or the spouse is husband died, it goes to the wife. The wife is a non-national now. So according to the regulation, whatever investment they officially made, now the wife is entitled. So the wife can take whatever the investment. Wife can't. It cannot go into the IIA account because she doesn't want to open IIA account. She is not making any new investment. The correct way is it should go back to IIA of the beneficiary. She is the beneficiary. What happened here? There is a provision. Whatever the investment that is already realized can come back to CTRA of that particular foreign national, because she's become eligible to, as a non-national, she's become eligible to get that money, the deceased person. So here, those funds can be gifted. By inheritance, she's getting it. Those money can come into CTRA, but of course, there is a limitation of taking into $30,000 per annum, because this $30,000 per annum coming in, because whenever somebody migrating, I think when we look at the migration allowance, you will come to know there is a annual income of $30,000 can be remittable. So this is falls under that category. Annual remittance of $30,000 can be remittable when a person migrating. That is the current regulation. Of course, with the recent restriction, now that have been reduced. So I will show you that also, the limitation. So you should know, okay, these are the limitation, right? In general, permitted credit to CTRA, where the account holder is an individual Sri Lanka who has obtained temporary TR, right? Another country, 30,000 to obtain foreign exchange. So he can whatever the rupee amount he can credit to his CTR account, 30,000 he can credit 30,000 because he has the LKR account. He's now trying to migrate under TR. He can credit up to 30,000 because he can take about 30,000 maximum. So he can transfer from his credit from his to CTR account. He can take the maximum of $30,000 from his funds, which is going on a temporary resident visa. Where the account holder is an individual Sri Lankan who is prospective migrant under the parent migration. So if a father, mother about to leave, about to go and join with your children in Australia or Canada, even their CTR account can be credited with whatever the money that belongs to them. So So when they obtain the parent visa, their account will become a CTR account. Those funds can come into credit to their CTR account. Whatever they are whatever they are inherited assets, they can come. Let's say if a father, mother here, when the child is trying to take them, the father, mother can open a CTR account, individual account, and whatever the property they sold and realized money can come into CTR account. That is belongs to them, where the account holder is individual Sri Lanka, who is a prospective migrant under the parent migration scheme. Funds equivalent amount of payment to be made to overseas authorities obtaining visa, because sometimes what happens, large amount you need not to pay to get the parent. If you look at Australia, I think $45,000 to $90,000 for one parents you have to pay. So much money required to under parent migration. So you need to send that money. So for you to send that, you use the CTR account to send the money. Then remember, by sending the money, it deducted from your migration allowance, because it's going out of rupee conversion. When anything going out of rupee conversion, it is recorded under your migration allowance. Whether it's a fee or whatever, still that considered as part of your migration allowances. Actually, you are not selling a property, taking that money. This is for you to enter into the country, you have to pay. Even that payment is considered from your allowance. Apart from that, you can't take it. No, it is also part of the payment. So for you to be eligible to go to that country, there is a large payment to be made to the government of Australia. Even that money is considered part of your migration allowances. That is the reason they said even that is considered as a part of allowance. So that's what it goes out to the CTR account. So it is accounted. So bank has to deduct it when they want to send these particular parents, when they want to send the eligible allowances, they will deduct this, whatever the payment made it for, to become eligible to obtain the parent migration. Income received from services provided by account holder can provide any services, and he can get some money that can go as a credit to the CTR account. He can continue to provide some services, that is his local income, that can go into CTRA, no problem. Interest earned in Sri Lanka rupee for the funds. If you have a CTRA savings account, end of the day, whatever the money there, you get some interest for the amounts lying in your bank account monthly. That interest will go as a credit to your CTR account. Okay. Now we are looking at the permitted debits to CTRA. What are the debits to CTRA? Where the account holder is immigrant, resident outside Sri Lanka, or immigrant leaving Sri Lanka initially or subsequently. So remember, initially or subsequently meaning he can leave first time initially, or after that he go there and come back and go there. There are people who go there first on TR, they get the PR, then come back here, and then they subsequently settle everything and then go there as a permanent. Then they go as a subsequently. So initially or subsequently can frequently come in. These interchangeable words are used depending on the way they are departure, right? Then what are the permitted debits? Remittance. You can look at the word, remittance, transfer. There are two things here. Remittance means you send the money out. Transfer means is going to the local other account. So you can now see, though you become eligible to send certain money outside, you can make a remittances from your allowances. Whatever the allowances, you can debit the CTR and send money. That is remittance, right? Or you can transfer your eligible migration allowance to your personal foreign currency account. So instead of sending money, you become eligible to send this money. What you will prefer, put it into your Pfca account, because that's a dollar account. Why should I keep the CTR in a rupee form? I can now, I am eligible, I am given all the document evidence. Now my $50,000 can be sent. For example, I'm saying, let's say $25,000 can be sent. Instead of sending 25,000, I can tell the bank, transfer that 25,000 into my personal foreign currency. I have a Pfca account. I am anyway Sri Lankan, now migrating. I have a Pfca account. Transfer to my Pfca account. So then goes to Pfca. Or I might say I want to invest in Sri Lanka. Though I'm about to go, I want to invest. So I can ask the bank to putting into my inward investment account, because now I am become eligible to open an inward investment account. I got a PR. As a normal, you and me can't open IAA because we are not eligible. But the moment I got the PR, now I am immigrant. I'm going to leave. So I can open IAA and I can ask my bank to transfer to my IAA account, right? So you can see a resident in, immigrant outside Sri Lanka, leaving Sri Lanka. So it is, they are giving everything considering whether you are resident outside or whether you are here or about to leave. So you are eligible to go at any time. So at that moment, you are eligible to open IIA. Anyway, personal foreign currency account, whether you are here, whether you are going there, you are eligible to open. There's no question. But IIA, you only become eligible when you have got the PR and when you are going out of the country, then you become eligible. Then instead of sending your money from CTRA, you can tell the bank, transfer it to my IIA. I want to invest. So you can see the different avenues, right? From your remittance, from your CTR account, you can directly sending it to your country. That is one option. Or else you can transfer to your PFC account. Or else you can tell the bank to transfer to your inward investment account. Or you can tell the bank, I have an offshore account at Standard Chartered HSBC within Sri Lanka, offshore account, is eligible, is now PR, that can go into that account, right? Or account maintained outside Sri Lanka. That is goes as a remitter. I send it to my own account in Australia. So you have all the option. Once you become eligible to take your migration allowances, you can send it whatever the way you want. You can retain here under the PFC, or you want to invest, you put it into the IIA account, or you want to send it to your offshore banking account locally, you can send it, or you can send it to Australia or Canada, whatever the country, you have bank account. So those money can go in. So you should know the option. If some customer asking, I have the migration, I want to send this money, what are the options? So you, as a banker, you must tell the bank, tell the customer, no, you can send it out. Why are you sending it out? Rather, you can keep it here. You can tell, why can't you put it to PFC? If you know that direction only, you can tell the customer. Otherwise, you think always the money has to go out. No, money can be retained here and the PFC. Even he can invest in Sri Lanka, or else he can have it in offshore account. If he doesn't want all these things, then he has to remit it. Mean that then he can go out of Sri Lanka to his own country. So that is how you should interpret, right? So this is very important. This is lacking in the bankers now. They simply say CTR, remit the money. No, not really. Not really. There are avenues. You can retain that money because we need money. Why are you sending the money there? Sometimes when the opportunities are there, unfortunately, with the lack of knowledge, we tend to do the worst thing, where the possible things are to retain the money, right? Then transfer to CTRA of children, grandchildren, spouse, siblings, or other account. Or you have the option to transfer wherever you want. You can transfer to CTR of the children. You have money. Now you want to transfer to CTR of the children account. No problem. You can transfer to CTR of the children, grandchildren, spouse, sibling. All that is your transfer to, subject to the regulations. So subject to whatever regulation, you can transfer to the children, grandchildren, spouse, sibling of the account holder as a gift. So you feel, I want to transfer it to so and so as a grandchildren or a children from your CTR account. You can transfer from your CTR account, right? Which is a LKR account. So you can transfer to the local, whoever you want it. You can transfer it to your children, grandchildren, spouse, siblings as a gift. You transfer it to, before you say elderly parents are going, they have the grandchildren, they are here. So they said, okay, we want to convert into all the assets CTRA. Now they tell them, okay, transfer it to 1 million to my grandchildren. That's possible. Just go into the grandchildren, provided that's retained within the country as a rupee. That's not a problem, right? That's possible. Transfer to non-resident rupee account of the account. You can transfer from your CTRA to your non-resident rupee account. You can maintain any number of non-resident rupee account. So you can tell the bank, okay, CTRA, I have funds. Can you transfer back to my NRRA, non-resident rupee account? So non-resident rupee account also your account. You can transfer from NRA to CTRA is possible. From CTRA to NRA. So of the same account holder. The account holder means same. Then remittance and transfer of funds which was credited from any income derived from the investment owned or acquired. Or so you can see, own mean that is its own one. The immigrants own funds deposited, invested in Sri Lanka. Acquired mean that he got it. Can be inherited, can be by law you would have acquired, or by way of a gift you would have got this by the immigrant. And superannuation benefit of the account holder. So whatever the money that you get, pension or whatever, superannuation, your EPF, ETF, contribution, pension, all the cumulative pension, everything, you can put it back to your personal for holder to a personal foreign currency account. That is what remittance or transfer. You can see when you say remittance is going out of the country, or transfer that within his permitted account. So what are the accounts he can transfer? Personal foreign currency account, or inward investment account, or immigrant remittable income account. Yes, he can, his income can be credited to his account. Whatever the income he derived from the investment, whatever investment he made, there are dividends coming, some income are generated. If he has some immovable property, there's a rent coming. All that income can go into his CTRA. From there, he can transfer, when some money is about to leave, he can transfer into his personal foreign currency account. He can make an investment, or he can transfer it to immigrant remittable income account, that is his income account, or account maintained in offshore bank unit, or account maintained outside Sri Lanka. Now remember, this is only possible once you show your income, whatever the income you derive from investment you acquired. So when you say investment, income derived from the investment, income means it's a current income from your investment. It is not the investment proceeds, it is income. So you should distinguish between the investment and the income. Income is coming from investment. Like if you make a investment in shares, the dividend is income. If you have immovable property, the rent is income. If you draw the pension, that's your income. So these income can go into a remittable income account. Okay, so this is when you are about to send only, or you meet all the requirement to send outside. Instead of sending, you have the option to transfer. So both cases, the one and the last, you can see the remittance mean the funds are ready to send out. At that moment, you decide whether to send out or retain here. That is what you can say remittance stroke transfer. Transfer coming in within locally, with other account it goes into. Remittance means going out of the country. So both occasion, remember, the account holder has to fulfill the regulatory requirement to send the money out. Then only it comes to the level of remittance. That means he fulfill all the requirement, he can just send the money. Instead of sending, now he putting into transferring. So you have to come to the level where you, so what is the level? I think in the next few slides you can see that. Where the account holder is an immigrant resident in Sri Lanka, where the account holder is an immigrant resident in Sri Lanka, withdrawal of foreign currency notes up to the maximum limit specified in the direction. Yeah, withdrawal of the foreign currency notes up to the direction. Yeah, on current transaction, say you can take up to $5,000 for your travel purpose. Current transaction means your travel purposes. Or transfer funds to uploading your travel card. Yes, for travel purposes, you can take $5,000 from CTR account. You are traveling with a return article, you can take $5,000. That's not a problem. Remittance of for the purpose of living expenses, immediate family member who is a dependent living outside Sri Lanka of the account holder. So if somebody goes as a dependent, right? So you need to look after the expenses, living expenses, right? Family member. So suppose say child is gone there for education purposes, and you are also about to migrate, you have a CTR account. So you can remit your CTR account, because that's a current transaction. So that's as far as that particular student goes as a resident, is going to come back. He's not go and taken the PR and remain in that country, then become an issue, because he's as a student visa. So you have to fund the account, but you are decided to go out, but you can fund the account. So that is a current transaction. So that comes as a living expenses outside Sri Lanka, right? Even a dependent, sometimes it could happen as a dependent. Now, so suppose a husband and wife has gone for education, the husband is about to leave. Even there are certain amount of money, depending on the type of visa you take, is permitted to look after the cost of living. Initial cost of living can be looked after. So on that context, the CTRA could be debited and the living expenses could be made. So that is again permitted debit to CTRA. Right. Now, let us view some more debit, then we go to the migration, right? Where the account holder is a non-national resident in, or outside Sri Lanka, including a minor. Remittance 30,000. I told you, whenever the non-national comes in, where they inherited some property, when they want to take the money, right? There is a limit of $30,000 per annum, because that is a regulatory requirement. when migration allowances are decided by the regulator, they said, okay, every immigrant is permitted to take an annual allowance of $30,000. So that $30,000 is interpreted to the people who are here acquiring some assets which are probably invested through the inward investment account, and they are inherited by way of taking that money. Even those people has to open the CTRA in order to take the $30,000. The $30,000 is something most of the people getting confused, because this 30,000 limitation per annum is possible for various issues, right? So suppose say if you have if a foreign investor made an investment, right, and that when the investment was made, there is no document evident he has made. So this is some about 20 years ago he made. There is no proof, right? Now he comes and asks the bank, I want to take this my investment out. This is the reason the central bank is very particular. When somebody want to make an investment in Sri Lanka, it has to come through the proper channel. So that is the reason we have been talking in the beginning of the session, IIA. So any investment coming into the account has to be channeled through IIA. Remember, that is important. Most of the time, people give wrong advices to the customer. To the poor customer, directly send the money. So I'll just give you an example. There was an investor who want to buy a property in Negombo for a hotel project, right? And that foreigner frequently visit to Sri Lanka. He liked that area. So he has partnered with other local guy, and the local guy showed him a property in Negombo, about 50 purchase or land or what extent, more than 50, I suppose. So they bought a guest house or whatever with 25 rooms, right? Now this foreigner liked that property. So this particular person has told the other local partner, so shall we buy the property? So he said, oh, so the property can you buy under your name? So what happened? The foreigner sends some money directly to that particular other partner. That guy go and acquire the property in his name. Now the foreigner sends investment direct to that particular account. Now hotel, the restaurant was put. They had a clash. The local guy tried to cheat him. Then what happened? They went to the police station and big issue. Then later, when he was asking why you have not told, he said, my bank have never told me. He put the investor put the blame into the bank. When I came here, I want to. They said no, you can make investment. But remember, now this is the wrong advice. Where it should have been done, the first thing, remember, if you get a query like that, if a foreigner want to invest in a property where you want to put up hotel or whatever with a local partner, it is the inward investment. You can do that. That's not an issue, right? The first thing, first of all, that particular property need to be acquired in the name of the business. So what should first thing happen? There should be business registered at first. There should be registration of business here with a local partner. So you need to register the business. Once the business open a account, bank account, now the investor can send the money to the business account. And the investor has to open IIA. He has to send the money to IIA. From IIA, it goes to the business account. Now, business, what type of investment from the IIA go to the business account? The business is where is having ownership. That is equity contribution of the local business. So the local business has to be established, bank account has to be established, then only the investment can come in. Without all these things, money cannot go directly to him. Now see that problem, it has to go to central bank to get a special permission. So central bank has said, why did you follow the wrong path? So he had to explain to them. So this is what you got to very carefully. If somebody want to approaches you, a foreigner, I want to make an investment, the first answer you should be, it has to come through by way of inward investment account. You need to open inward investment account. You have to send the money to the IIA account. From there, it can go to the permitted investment, right? But if the investor says, no, I don't want to open account, but there is a company you want to borrow from me, then you can approach the borrower. If he's your client, you can tell the borrower, open external commercial borrowing account with you as a bank. Then let the investor send it directly to external commercial, because the investor doesn't want to open IIA account. So there is a provision now given by central bank. If the investor want to make an investment by way of a loan to a quoted or incorporated company in Sri Lanka, the investor need not be open IIA because investor doesn't want, right? Then he has the option to. That is the exceptional case. Other than that, all the investment has to come through IIA. So remember that any foreign investment has to come through Sri Lanka via IIA. The only exceptional, if the investor doesn't want, because it's the only way, by opening IIA, he has the benefit of taking everything through IIA. That is the benefit. Whatever investment he invested, without any problem, he can take it through the same IIA account. That is what we learned. IIA. IIA is the account, investment coming in, investment going out through the same account with the capital gain. So the IIA is the right account. So you need to be aware of the importance of advising customer when it comes to investment into Sri Lanka. It has to be IIA, right? So here, there again, inward investment account or personal foreign currency account. Here what happened? There is a remittance of 30,000. This is again a non-resident. The CTRA can be debited up to 30,000 per annum. That money can go into the eligible beneficiary. It's again goes to the account outside, or it could be transferred to the personal, inward investment account or personal foreign currency account or account maintaining offshore account. So the up to $30,000 they can remit money as a eligible invested amount inherited by the account holder who open a CTRA. From the CTRA account, he has the option to send the money out or to retain with this one of the account, inward investment, personal or offshore, or even send the money out. Remittance or transfer out of the funds credited super benefit, EPF, ETF, gratuity, all those payments can go into same again, personal foreign currency account or its inward investment account. All that is if they are getting a non-national resident in outside getting EPF, ETF, terminal benefit, all that money can be sent out or even can retain in the personal foreign currency account if they are eligible to open, or inward investment account. All that is as a non-national, whether they are resident in or outside Sri Lanka, if they are eligible to certain income to be sent, it can be superannuation or any investment they made, it is coming in the form of a income or capital, they can repatriate or they can retain it in their respective PFCO, IIA or OIA account, offshore account. If not, can remit out. So that is non-national resident in, right? In general, permitted debits to CTRA, where the account holder is an individual Sri Lankan who has obtained temporary resident to age up to 30,000 is issuance of. In general, you can debit and take the CTRA up to 30,000 maximum for a temporary resident account holder. The TR can take up to $30,000. That is the regulation says. I think we will, when you go through the limitation, you will know temporary resident as a 30,000 limitation. Where the account holder is an individual Sri Lankan who is prospective under the parent migration allowance. Yes, whatever the money that you want to take by debiting CTRA, you can take it up to the whatever the eligible amount you need to send it to obtain your visa. Where the account holder is administrator executor, executor, you know what is administrator executor? That's in the event of a death of the person, deceased person, then the transfer of funds need to take place by the administrator executor by continue to operate the debit and transfer into the respective beneficiary. Disbursement in Sri Lanka is Sri Lanka rupee. Whatever the money that means payable in locally, that has to be done in LKR. That you know, right? So, okay, this is the migration allowances. As per the direction, this is the migration allowances. Since 2000 November, that exchange control was discontinued and foreign exchange came, they have increased from 150,000 to 200,000. So if anybody asking you what is my entitlement, any immigrant going out of Sri Lanka as a initial migration, you have to remember the correct word. Initial migration allowances is $200,000 or its equivalent per individual. It was $150,000 up to November 2017. It is increased from that period As at now, 200,000, right? This is the migration allowances per person. This goes as an initial migration allowance. First time when you are taking as an initial migration. Thereafter, you are entitled for an annual migration allowance of $30,000 or its equivalent. Or you have to always remember, in exam point of view, I have not put here, but you need to be aware of when you're specifying an amount, you can't say $200,000. You can't say $30,000. You have to say, oh, it's equivalent. You are not taking every time dollar. There are a situation you can go to Europe country, you want to take Euro currency, or you may go to UK, you want to go to GBP, or you might go to Australia, you want to go to Australia, you want to go to Canada, you want to Canadian dollar. So it is dollar term. So you have to say US dollar 200 or equivalent in other designated foreign currency, or equivalent if you say that's correct. So you have to be careful when you're mentioning an amount, US dollar 200,000 or its equivalent. Or 30,000 or its equivalent. The 30,000 for annual migration. So see the difference between these two. Initial migration allowance 200,000. Annual migration allowance 30,000. That annual migration allowance start coming in, remember, once you take the entire initial migration allowance fully exhaust. So say you're migrating. You're migrated, let's say you are migrated 2020. You take 50,000 in 2020. 21, say you have taken 150,000. Now, from last year onwards, you have completed your quota of initial migration allowance. 200,000 you have taken. The last payment you made in last year June. Let's say last year June you have taken the 150. Previous year 50. You have 200,000 you have taken. From last year June up to other 12 months, after lapse of 12 months, your initial migrations, your annual migration start coming in. That is the reason if you read it, annual migration allowance 30,000. First such annual allowances is transferable after lapse of minimum of 12 months after the full utilization of the initial migration allowance. What do you mean by that? If you are entitled for 200,000 as initial migration allowance, 2020 you have taken 50. 2021 you have taken $150,000, the entire balance in June. So by this year May, the 12 months over. 21 June you have taken. So 6 months, July to December, again another 6 months, maybe up to June here this year. End of June this year, your 30,000 annual allowance will start coming in. So from this year onwards, you are entitled for every year 30,000. So you have a current year, you have 30,000. So that will comes in after lapse of 12 months after taking the initial migration allowance. So remember that you need to explain to somebody. If they are asking you, can I take 200,000? You will say yes. How much my annual migration allowance? You say 30,000. So customer will say, okay, I am taking 50,000. He will start counting. This year I have 30,000 annual. So no, that 30,000 only starts coming in after you sending the entire initial migration allowance, again another lapse of 12 months. So you need to be aware of when is your initial migration, your annual migration starts kicking in, right? You should know that, right? It is for first such annual allowance is transferable after lapse of a minimum of 12 months after the full utilization of the initial migration allowance. Now you are aware, right? After 12 months, taking the full amount, then only your initial migration, your annual migration 30,000 will start in. That is accumulative. What do you mean by accumulative? If I give you an example, let's say a person migrated in 2020, taken 50, 21, taken 150. This year is annual migration 30,000 is entitled. Is not taking. 23 next year is not taking. 24 is eligible to take 90,000. Why? 22 this year 30, 23 30, 24 other 30. It is accumulative. Annual migration can be accumulative. Therefore, he is entitled for 30,000. But he should not get the wrong impression saying, I migrated 20, for the 20 also I am entitled, 21 also I am entitled. Then if he started working out and say I am about 150,000, no, it is not the case. The 30,000 start working in after lapse of 12 months, fully utilization of your initial migration allowance, right? That so earlier it was 20,000 annual, now increased to 30,000 since November 2017. A Sri Lankan individual who reside outside Sri Lanka and has obtained temporary resident visa permitted 30,000. That is what you learned now little while ago on the other slide. So now you know the limitation. 200,000 initial, 30,000 per annum start coming in after lapse of 1 year after full utilization of initial migration allowance. People who are going on a temporary resident can take 30,000. So after learning everything, next slide. Yeah, this is the procedure. Before you go to the procedure, if you look at this, currently these amounts have been restricted by central bank. Now you are not eligible to take any more than 200,000. Your transfer property, inherited, you get from gifted, everything, that nothing can be taken. Only these amounts are currently can be taken. So you are aware of. Right? So before you go through, let's see, these are temporarily they suspended. So let's see what is the normal, in the normal course of business, what are the documents for you to take this money. Let's assume this restriction will be removed shortly, hopefully. Then anyway, you have to follow this. Whether you take 30 or 20 or less amount or whatever, this is the procedure. So if somebody asking you, you need to explain to them, this is the procedure. First of all, request for registration number, open CTRA. So you need to know, first of all, what is the first step you will tell the account holder? You need to open a CTRA, which needs to be registered with central bank. That is the first advice. Once you have the CTR account, the customer has to make a formal request. He got the PR, now he want to remit money. So he comes with a letter. Bank might ask him to give a format, whatever letter. They will have application. He has to fill it. And you have to make a request, how much you want to take it. Then a copy of personal identification, NIC or birth or whatever you get there. Then document to prove whether you got a PR. So you look at the passport, he got a PR, temporary resident or PR visa is there. Depending on the visa, you take a photocopy of the visa. Then copies of his personal data. In passport, you get an immigrant status. So you get a passport, is photograph page. Valid document to prove. So where the source of funds? Now, how is going to take the money? So he has to prove the source of, he has sold his property, he has some EPF funds coming in, all the document evidence are there with you. So you know the source of funds are collected from this. This is for the AML KYC purposes, right? Source of funds, you verify, it is out of his EPF funds. He has been saved from the bank account. You know the money that has been saved. You know there's nothing to prove. I have 1 million. I got EPF 5 million. This is the 6 million I'm about to take. So there's nothing to prove. That's more than enough. When the money just coming in as a bulk amount, 10 million, 8 million, 10 million, 50, whatever the money, then you need to know where it's coming from. You have to ask the account holder what is the proof, from which account, whether you got the transfer, somebody gifted to you, or you are inherited, you sold that. Every document evidence need to be proved to the bank, to source of funds. Then a one-way ticket, copy of the ticket, right? So the important documents here are tax clearance. So remember, you are eligible to all these. You need to get the tax clearance from the Department of Inland Revenue. You are permitted to take this money, not the permission. Tax clearance is given. Your taxable income after deducted, so much can be remittable, right? So you need to be aware of, though you are eligible to take 200,000, if you get a tax clearance only for 2 million, remember the 2 million rupee equivalent in dollar only you can take, because the tax clearance is only given for 2 million. But your entitlement is $200,000 you can take. That's about 40 million you can take at the current rate. But you have been given only 2 million from the tax clearance letter. So Inland Revenue given only clearance for 2 million. So you can only take 2 million. So you need to be aware of, when you are sending migration allowances, the important documents is a tax clearance. If the tax clearance says 10 million rupee can be taken after deducted tax, the tax cleared amount is 10 million, mean you can take 10 million equivalent in dollars. So the tax clearance amount only will give you the provision to remit money. So the key document here, tax clearance. Though his entitlement for 200,000, he can't take to India 200 because tax clearance is only for 2 million or 5 million or 10 million. So within which it has to be. So let's say he has got 8 million tax clearance. So 8 million rupee equivalent in dollar only can be taken. So he can't take, let's say $40,000. That's all he can take, nothing more than that, right? So example, I'm just giving if it is 8 million, $40,000 roughly. That is the amount he can take. He can't take 200,000, right? So that is the tax clearance. So very important to know what is tax clearance, what is the amount cleared. An affidavit duly stamped, attested by JP, just to say that he has not taken any amount from any bank. He is taking his initial migration allowance only, an affidavit. So these are the documentary evidences. Now you are confident if somebody asking you, when I'm migrating, what is the procedure? Now you can tell them, okay, you have to open a CTR account, get their PR, get the passport copy, get the visa. Can I have affidavit signed by JP saying that you are not taken any migration allowance from any bank? This is the allowance first time you are taking it, right? Then take the tax clearance and look at the amount, how much he can take. Say that the amount is mentioned in Rupee form, 5 million or 10 million. That equivalent only he can take. Though his entitlement for 200,000 as initial migration allowance, he can't take because the tax clearance is less amount, right? You have to be very, very careful, right? Then valid document to source of funds, take the one-way air ticket copy. Those are the documents required. So now in a position to explain somebody confidently, because if you know the regulation only, you can tell somebody when they're asking you advice, how this could be handled, right? Okay. Now after going through that, you can see now currently central bank suspended any inheritance property, any big amount cannot be sent. 200,000 and all, you can't think of sending it at the moment. Though we learn everything, that's what I put current restriction. They are put currently restriction. They say anybody first time migrating can take only $30,000 until further notice. So when you're migrating, unfortunately, during this period, though you have tax clearance, everything, you can't take 200,000 because they said initial migration first time we can give up to $30,000. Right? You can't take more than $30,000. Then, if you have already, if you have repatriation of an immigrant who are already claimed, so let's say you already gone there and you want to take the balance amount. So they say if anybody already utilized whatever the previous amount, if they want any amount subsequently, they can only give $10,000. Let's say somebody has gone there, taken 75,000 and gone. He has under the impression he migrated in 2019, thinking that he can take 200,000. He has only taken 75,000. Now he's asking bank, can I take other $75,000? Now the bank has to say no. Currently, you can only take $10,000 because central bank says people already taken can take only 10,000. First time somebody migrating can go up to 30,000, right? Right. And limit the outward remittance issuance of foreign exchange for temporary resident visa. Anybody going for temporary resident visa can take 20,000. Can take 20,000 temporary resident visa. And limit the issuance of foreign exchange for any person resident who is intend to leave Sri Lanka under TR. If anybody going under TR visa leaving Sri Lanka can take only $10,000. So you can see the restriction imposed by. They said anybody first migrating now can take 30. Already migrated can take other 10,000 only. If anybody going under TR already reached, they want to take anything, they can only take 20,000. If anybody going first time with a TR visa, they can take $10,000 through the banking channel. So these are the restrictions imposed by central bank currently, right? Now, under OIA account also, we learn everything, outward investment account, but currently you cannot do any payment. So those are current restrictions you should know. Though we studied, these are temporary restriction. Hoping this will be removed shortly, right? This is how, so you should know, somebody asking what is your regulation, this is currently, this is restriction, but you should know your original regulation, right? So that is how you should interpret, right? Okay. NRRA, this is the other account. This is a newly introduced account. Now you know there are two people coming in. I told you, firm, company, established, incorporated outside, any immigrant resident in or outside Sri Lanka. I told you, any immigrant. So that means when I'm saying I'm migrating, my all account other than one account, all are my NRRA. Apart from that, a company incorporated those days overseas having a LKR account also become eligible to NRRA. So there are two categories, NRRA. A company, firm, established, incorporated outside Sri Lanka, and an immigrant resident in or outside. I can be immigrant, I have already gone to Australia temporary visa, or I am here about to go. Both are possible. Both category of people can open NRRA, right? Opening and maintaining NRRA. NRRA may be opened and maintained in the form of savings or current or term deposits. Yeah, it can be term deposit, because until I'm getting CTRA, all my money need to be deposited in a fixed deposit. So the NRRA should be term deposit, not the CTRA. CTRA, I want to send the money. So CTRA, no necessity to have a term deposit. But NRRA should have, because I'm keeping my money for a fixed deposit. I keep my money until I get the PR. So all my money should have the NRRA, right? Or even after migration, I may keep my money in NRRA. I need to keep and get a more interest in NRRA. So no, I will only transfer when I'm about to take my eligible allowance to CTR. Until such time, I need to get more interest. So therefore, NRRA term deposit is possible. Even companies maintaining, so they have to give term deposit, right? NRA shall be held as a sole account maintained by the immigrant. L joint account with eligible migrant. So if husband and wife going, they can make NRRA joint, because that's not make any difference. But CTRA, they have to individually, they have to maintain separately, because they are eligible to take migration allowance. NRRA just joint account is not a problem. All Sri Lankan rupee account maintained by the immigrant who expect to leave Sri Lanka. All Sri Lankan rupee account maintained by the immigrant who expect to leave Sri Lanka for the purpose of permanently settling in the other country will be, yeah, you know that, right? Anybody who maintaining LKR account want to migrate, all the account become NRRA except one CTRA, right? You know that, right? Okay. Opening and maintaining NRRA, all capital transaction rupee account, all capital transaction rupee account except the account for which registration number have been issued by the central bank shall be redesignated and continue to be operated in NRRA. Yes. All capital transaction rupee account. That means already you maintain capital transaction rupee account all this time before March. Last year, March, they said, okay, all the capital transaction rupee account need to be converted into NRRA except one account for which the registration number you got it, right? So that's fine. You know that, right? All Sri Lankan rupee account maintained by the immigrant who expect to leave Sri Lanka for the purpose of permanently, yeah, need to be converted into NRRA. That you know, right? Okay. A firm or a company established incorporated outside Sri Lanka who expect to execute transaction permitted under paragraph 47 under heading of that. I want to show you. You need to know this. What is 47 under heading of A, schedule of 1, foreign exchange, class of capital transaction, regulation number 2 of this is what happened when they have made some investment. There's no records. So central bank says, okay, you can open a NRRA and keep that money in the NRRA account for you to run the business. So what is this rule? I have show you a slide, then you know what is that 47 rule. 47 under heading schedule 1, right? Okay. Yeah, I have taken it. What is that 47 says? In the event where the evidence of inward remittances are not available for the investment, that means people who have made investment into Sri Lanka, there is no evidence of inventory. When they have made investment, they know. No, I was talking about Tata, all these Indian company. They have long time, about 30, 40 years, they open the account. No inward remittance can be traced now. So central bank given the provision, okay, if anybody made investment into Sri Lanka, they don't have any documentary proof to show, then what do the alternative they are giving in this regulation? Under this 47 they are giving, not eligible for the investment, refer to under B subparagraph 5 blah blah heading, part of any income capital proceeds of such investment shall be credited to capital transaction rupee account or non-resident rupee account as the case may be, opened by the investor or the beneficiary as the case may be, repatriated subject to annual allowance of 30. This is what you learn in some slide. I put 30,000 per annum. Why this 30,000 restriction? Because this clause in this particular regulation says if anybody brought the investment into Sri Lanka, if there's no records found, they are eligible to take 30,000 from their CTR account, or they can even put it to NRRA account. From there, they can transfer to CTRA when they want to take. But CTRA, they can take 30,000 per annum only. So if they put large amount, they have to slowly, small, they have to take under CTRA. Because this is investment made without any documentary proof. That is the reason I told you, even current situation, if you should not allow any investor to invest directly, because this is happening past. In past, most of the investors have made direct investment without coming through IIO security investment account. But that was a true account that was there. Security investment only become IIA now. So if you are bypassing IIA, you have a problem to take. So that is the reason central bank give an option. People who have taken prior to this date, they are giving a date also prior to this date, without any document evidence, if they brought any investment into Sri Lanka, there is a provision available. Okay, we will allow them to open a CTRA, take 30,000 per annum, or they can put it to NRRA. That is the reason. That is the regulation you should know. That is why I extracted and quoted here, so that you will. Otherwise, if I quote some numbers and this, you don't know what I am talking, right? Now you know. On the heading, look at go through the website of central bank. You can get this regulation. Now read it. You know the details to read. Regulation number 2 of 21 dated is there. What is the heading? I have given heading under a schedule of foreign exchange classes of undertaken under Sri Lanka person resident outside Sri Lanka regulation. If you type this, you get the entire regulation coming in. Then you look at the 4.7. I just extracted, but in that circular you have to look for the 4 and 7 point. So that is I quoted here for you to for easy references. Otherwise, you might not know what I'm talking, right? 4.7, that is the regulation, right? Permitted credit to NRRA. Now we are talking about non-resident rupee account, right? Where the account holder is an immigrant. Where the account holder is there are two types, immigrant and company coming in, right? NRRA. Now you know. Any proceeds derived from any asset, any asset including movable, immovable, owned by the, yes, whatever assets when you are migrating, you put it to your rupee account. That rupee account now become NRRA, right? So your own assets, maybe you inherited, second one is inherited, or third one is gifted by immediate family member would have gifted to you. All that is can come as NRRA. Any proceeds, any assets, including minor, are inherited or received by way of a gift by the immigrant. Yes, by the immigrant. So you whatever amounts that you are getting from a immediate family member. So let's assume that you are migrating, right? So you have asset, you are selling that asset, your money can come into NRRA as a credit. You have got some asset from your inherited asset, portion of the asset sold, and you are getting your whatever amount belongs to you, that you're putting into the NRRA. Some of your immediate family member or gifting you as a gift, whatever amount financial that you're putting into NRRA. So it is inherited, it is gifted, it is owned by you. Everything goes into NRRA as a credit, right? Any income derived from investment owned by inherited. Yes, whether you own or whether inherited or gifted, any investment you made, any income coming from that investment, I can also go into NRRA, non-resident rupee account, right? Superannuation benefit, yes, all your EPF, ETF, all that can go into credit to your NRRA, all your income, right? That is all your income, right? Then, where the account holder is a firm, we were talking about the startup company and all having a rupee account here. Local income, if they have any local income from the current transaction, they can't do any capital. If they are doing some current transaction, some incomes are there from that can go into, after verifying the document render, bank can credit to that particular company's rupee account. This is a company incorporated outside Sri Lanka having LKR account. They are having some limited operation. If they are having some income, that can go as a go into this account. This is a rupee account. It goes into the rupee account. Any income, any capital, yes, I think this same regulation 4.7, I told you, if they have made some investment long ago, if they want to get some whatever the amounts that belongs to them, that investment amount can come into NRRA subject to limit of 30,000, they can remit. So that income can come into NRRA. The 4.7 rule is, now you know what is 4.7 rule, right? There's no record found when they made the investment. Now whatever the income or capital proceeds can come into NRRA account. Okay. Permitted credit to NRRA in general. Remittance in foreign exchange received from outside Sri Lanka in favor of the account holder through the bank. So if you get any inward remittances to your NRRA account, say your sister Australia sending some money to you, you also migrating, you have NRRA, that can come to NRRA, right? Interest earned, if you have whatever the money in your NRRA, it will be attracted end of the month, you get interest. So that comes as a credit, right? Permitted debits to NRRA, where the account holder is immigrant. What do you do? Payment related to investment as permitted in foreign exchange class of capital. So if you want to make an investment, what you do? You from NRRA, you can transfer, right? capital transaction Sri Lanka by a person resident outside Sri Lanka. If you want undertaken Sri Lanka by person resident outside Sri Lanka. Yes, you want to make an investment. You can make an investment as per the permitted from NRRA. Transfer to the capital transaction. If you want to send the money through capital transaction, you can transfer because you want to send it through the CTRA. Transfer out of the current income of the account holder, any income derived from the investment. Yes, you can transfer the current income of the account holder, any income derived from the investment owned, inherited, whatever the income that you own, you can transfer out of your current income as a gift by the immigrants. So you have, this is one point, remember, as a gift to the immigrant remittable income. That is the other account you are going to you are going to learn. Immigrant remittable income account, where the immigrant need to open this account based on the country requirement. So if this particular person getting the income into NRRA, now he feel there is a requirement in the country that he is going to migrate, he has to get his income different from his assets. So he has to open two accounts. He has to send the money through CTRA. All the income has to send it through area account, ERIA. So that is the credit we are talking about here. Transfer of current income of the account holder, any income derived from the investment owned, inherited, received a gift by the immigrant to the immigrant remittable income account. So though the bold point here, it is all one now. So that is by mistake that the bold is there. So the bold should not come there. It is all one point, right? By the immigrant to the immigrant remittable income account, right? Transfer of funds to the capital transaction Rupee account of the yeah. So you can transfer fund from NRRA to the capital transaction of the deceased person, estate of a deceased person. In Sri Lanka, disbursement in Sri Lanka Rupee. So that is the debits of NRRA. For the company, probably, yeah, where the account holder is a firm, a company, then they can remittance out of funds credited from the local income derived from their current transaction. Remittance means from the local income, whatever they get it from their current transaction, including interest, they can remit. They can remit out, because these are their current transaction and the interest income they earn from their deposit that can be remit out, right? Out of the funds credited from any income, any capital, yeah, you know that, right? 30,000 regulation coming, you can debit and send the NRRA up to $30,000. You can send it out, or you can even put it to inward investment account or keep it in the offshore banking account. In Sri Lanka, if you want to send it locally, the company want to disperse it locally, then it will be locally, you can disperse in local LKR. If you want to make a local payment, you can use it locally, right? So now you know what is this account. NRRA comes in for the two category of people. One is immigrant, other than CDR, all the account NRRA. There is other company incorporated overseas having a Rupee account, also central bank designated as NRRA. For their credit and the individual credit, we have shown in the slide separately so that you will have a better understanding. Right. Immigrant remittable income account. This is the only account can be opened by an immigrant. So this account was newly introduced for the purpose of repatriation of a current income derived in Sri Lanka by an immigrant only if there is a regulatory requirement in the country where the immigrant is residing permanently to identify the current income globally derived from such immigrant. So current income is something every year they will get it. Initial migration allowance is one time, right? The current income is something they can, other than the annual migration allowance, you get your current income annually, you can send that, right? So when you want to send a current income, if the country requires separately, then you have to open an area. So this is only required when there is a not local regulatory requirement. It is the regulatory requirement of the country where you are going to migrate. If the country has to have a record, because of this AML KYC, that country regulation is so stringent, they might have a separate requirement. Any immigrant coming into their country will have their income coming in separately and their assets coming in separately. So they can't every time one account, if you everything coming through CTRA, just think every time every amount coming through CTRA, if you are migrated to Canada, that Canada bank might think, okay, this X is Sri Lanka getting money frequently. They don't know what is this money. Every year is coming, $30,000, $25,000. They don't know what it is. They have a streamlined process. They want to know this immigrant who is coming from Sri Lanka getting frequent remittances. We should know what is this. What are these remittances? So they have their own system. So they might request the immigrant, look here, we want you to remit separately your assets, your current income. Then the immigrant got the message. So he will go and tell the bank, I want to open an area account to send my income. So the bank, when they are remitting money, they will say current income. In the payment message, they can say purpose is current income. So they know the current income of his income from his investment. That is the current income. So in order to send this current income, only this account is required. If not, this account is not at all required, right? So you know this account is not very important, but it depending on the requirement of the migrated country, require whether it is really relevant or not. It's only eligibility is an immigrant, right? Area may be opened and maintained in the form of savings or current. Obviously, current or savings. There is no point maintaining in FD, right? Eligible person shall open only one area in the banking system. Yes. Both capital transaction account and area shall be opened, maintained with the one AD. You know, the same authorized dealer. Authorized dealer permitted to open, maintain area in the name of the immigrant who has already opened capital transaction Rupee account with the registration number issued. So if you have the registration number CTRA, you can open the area with the same bank, right? Okay, so let us look at permitted credit. Any income derived from any asset in Sri Lanka. Yes, any income. Whatever assets your income, your current income can be coming from any movable, owned by you, or inherited by the immigrant, or gifted by, all that is same, all same wording, including movable, immovable, all same wording, only different wording, owned by the immigrant, inherited by the immigrant, or gifted by the immigrant, or from an immediate family member. Income received from the services. If you provide some service and you get some money to your area account, that also can come into credit. You get your EPF, ETF, yes, your terminal benefits. Transfer being current income, account holder, non-resident Rupee account. Transfer being current income of the account holder from the non-resident Rupee account, or capital transfer, or if you have a NRRA, your capital transaction from that account also, you can transfer to area to show that your income, interest earned from the funds held in the account. Yeah. So your savings account type, you will be getting interest, right? Permitted debit area. Remittance in favor of the account holder. You can send the money outside. Remittance, you can make the account holder name. Transfer to inward investment account. You, instead of remitting money, that current income, you can invest into personal foreign currency account, inward investment account, offshore account, or even you can send outside. Sorry, not send outside. OIA, offshore banking unit, right? Then transfer of the funds to capital transaction account of the administrative executor. Yeah, in the event of executor administrator come in the event of a death of the customer, right? Payment in relation to loan obtained by if you have taken any local loan, you can pay out of your area account. These are all local. Payment in settlement of electronic fund transfer card, yeah, or whatever the card you have, debit card or credit card. Disbursement in Sri Lanka Rupee, right? Okay, now we are moving on to diplomatic foreign currency account, DFCA, and diplomatic Rupee account. So you know who is eligible? All a diplomatic mission, diplomatic person. Foreign diplomatic mission, you know, Indian High Commission, Chinese High Commission, US High Commission, that is a diplomatic mission. Then diplomatic personnel who have been exempted from requirement of obtaining this. So these are the head of the mission, head of the embassy, and their family members. I think generally diplomatic people bring their family and stay here because their tenure is 2 to 3 years. So they come with the family. That is the reason you have these international schools and all. You can see all the diplomatic children are studying in these schools. They focus the international school because they prefer to have the same curriculum in their country. You have overseas schools for the children to study. That is again other income to the country. So diplomatic missions. So these people are permitted to open two accounts: diplomatic foreign currency as well as diplomatic rupee account, right? DFC foreign currency, DRA rupee account, diplomatic foreign currency may be opened and maintained as a savings, current or term deposits. Yes. DFC, DEC may be maintained in any designated foreign currency or in Sri Lanka rupee, or DFC, any foreign currency, DRA is a LKR account. DFC, DRA maintained by the individual may be held as a sole or joint account. Then husband and wife can have a DFCA, husband and wife both are can open a joint account, or the father and the children can open a joint account, or whatever their preference, right? A permitted credit to DFC. What are the permitted credit? Where the money is coming from? Definitely remittance coming from, received from outside Sri Lanka. So they get the remittance from their respective country. All right. It can be mission income. It can come to their mission, diplomatic mission. The money can come from the country. Foreign exchange brought into Sri Lanka. Account holder can bring the money. Submission of evidence he has brought in through the authorized dealer. Transfer from an inward investment account or account maintained offshore credit. Transfer from, if the guy has an inward investment account, he can transfer from inward investment account or from the offshore banking account to his DFCCA. So the diplomatic people also permitted to invest in Sri Lanka. So if they made an investment, if they have money in the IIA, they can transfer from IIA or the offshore account to the diplomatic foreign currency account, right? Transfer from diplomatic foreign currency to diplomatic rupee account, irrespective of the account holder. Irrespective of the account holder means husband can transfer from this DFCA to wife's DRA. Irrespective, whatever the relationship within that diplomatic family, they can transfer. There is no problem. Interest earned in foreign currency, yes. That is DFCCA permitted. DFCCA permitted debit any outward remittance made outside Sri Lanka. They can make any outward remittance without no restriction. These are diplomatic people. Their incomes are coming from their own country. Withdrawal in foreign currency for travel purposes. Disbursement in Sri Lanka, foreign currency, they can take travel purposes. Disbursement in Sri Lanka rupees. Transfer to IIA, if they want to make investment into inward investment, you are transfer from DSA to IIA. Then, or even OBU, account maintained offshore banking, you can transfer to DSC to DRRA, irrespective of the account holder. From DFCC, you can transfer to DRRA, it's possible. Transfer to the personal foreign currency account, business foreign currency account, any other person, respect of purchase of. So if they purchase any goods from the local guy or any person who is locally, they can transfer from the diplomatic rupee account to the personal foreign currency account for goods or services they offer, right? So personal foreign currency, business foreign currency, we learned in last session. These two currencies are resident maintained. So if they offer any services to a diplomatic person, the diplomatic guy can ask the bank to debit and pay them. So it goes to the credit to those accounts, right? Permitted credit to diplomatic rupee accounts. There again, remittance coming from outside Sri Lanka, or maybe collection of visa fee. Diplomatic rupee account maintained by individual diplomatic person or diplomatic mission. So they have the collection of visa fee. Visa fees are generally collected in rupee. So that comes as a refund fee, visa fee, all that comes as a credit to the diplomatic group. Sell purchase of motor vehicle owned by the account holder. If they say they are eligible to buy the motor vehicle, when they sell it, that credit, they can use the motor vehicle because they will be here using their vehicles and all. So when they buy the property, they can sell the movable vehicle is a movable property. When they depart from their tenure of service, so they can sell the car and put the money into this account. Transfer to IIA of the same account, they can make investment, yes. Transfer DFC to DRA is possible, irrespective of the account holder. Interest earned from the rupee account, yes. Permitted debit DRA, disbursement in Sri Lanka rupee. They want to outward remit in respect of sale proceeds of motor vehicle. Yeah, they want to buy the motor vehicle. They debit and buy outer in the current transaction, visa fee, all that payment they want to make, all that possible. Transfer to IA of the same account holder. You can want to invest. You can from DRA you can invest. Transfer to DFC to DRA is possible. Any other transaction, foreign exchange approved by the relevant line ministry. So this is simple accounts. This is only exclusive for these purposes of maintaining diplomatic rupee account and diplomatic foreign currency account interchangeably. These accounts are used. This is only exclusive for the diplomatic people, right? Okay. We are coming to the external commercial borrowing account. This is the new account that was brought in, right? External commercial borrowing account. Who is eligible? As I told you, only companies incorporated in Sri Lanka. There's no other person. The borrower has to be companies, right? So they can open eligible commercial borrowing. ECBA may be open and maintained in the form of savings or term deposit in any designated foreign currency in Sri Lanka. Rupee in Sri Lanka rupee. It could be foreign currency or it could be rupee account as a sole account, right? The account has been reintroduced to facilitate permitted borrowing. Yeah, it has been earlier. It was introduced as external commercial borrowing scheme. Now it was reintroduced as external commercial borrowing account. That is because the foreign lender, when they want to giving investing in the local company, when they want to give a loan, they don't like to open account. Instead, they want to send the money direct to the borrower. So therefore, borrower is permitted to open an external commercial borrowing account with the bank. And you can see remittances, transfer of proceeds of the loan obtained by the account holder from the overseas lender from an account maintained outside Sri Lanka or inward investment account. Or if they have an offshore account, they can even. So now you know where is the money coming from to ECBA. It is from the foreign lender's account, or if the foreign lender prefer to open IIA from IIA account, it can come, or from offshore banking account, it can come. Transfer from another ECB of the same. So if the ECBA holder has a two account, he can transfer from one ECBA to, let's say, Hale is a borrower. They have ECBA, they have HSBC, they have a HNB. They can transfer from HSBC to HNB, HNB to HSBC. They can transfer within that same company, right? Transfer from an outward investment account or business foreign currency account made in offshore account holder for the purpose of servicing the loan, right? For the servicing the loan, if they have invested purely because I told you when they can borrow from overseas and make investment, outward investment account, right? So what they do, they are transferred to outward investment account purely because they want to make investment outside Sri Lanka by borrowing funds. Therefore, from ECBA, they can transfer to the outward investment account or the business foreign currency account or account maintained in the offshore unit for the purpose of servicing the loan. Yes, for the purpose of servicing the loan, they need to, from outward investment account, they have to credit back to the account because they made a outward investment through the ECBA funds. Interest earned of the funds held in the account, right? Okay. Permitted debit. Transfer loan proceeds to Sri Lanka rupee account. Remittance in respect of current transaction of the account holder. Yes, they can make any current transaction. Transfer to ECB of the same account holder. I told you HSBC to HNB, HNB to HSBC. Transfer of loan proceeds to an outward investment account of the account holder only if the loan have been obtained for the purpose of financing it. Yeah, as I told you, outward remittances, outward investment account is suspended. New investment can only be made if the investor in Sri Lanka can borrow from overseas external commercial borrowing, that funds can be utilized to invest. So that is what you got to know, the fourth point. Transfer of loan proceeds to an outward investment account of the account holder only if the loan has been obtained for the purpose of financing outward investment. Now it's very clear, right? Only for that purpose. Remittance, transfer of funds to the account maintained outside Sri Lanka or inward investment account maintained offshore banking of lender. So you need to repay the lender, right? So you need to debit and repay the lender, right? Repayment. Bank charges, fee, commission, disbursement, Sri Lanka rupee. Yes, you covered. Right. So we have the last account, special deposit account. What is the special deposit account? This is the account when central bank introduced recently, when we are looking for about 2-3, I think it's 2 years now, almost closer to 2 years. April 2020 it was brought in. 22 April, I think it will be up to, for the moment, the scheme is extended till November this year. This is actually government want to bring new investment into the country by form of a deposits. So Sri Lankan individual can open this account, dual citizen, foreign company, any well-wishers, whoever prefer to open this account can open. The only thing is money has to come by way of inward remittance. That is the only requirement, right? So the special feature here, so you can see starting period 24 months from period of 8th April 20. I think 24 months in 2 years. By 22 April, this scheme is will be maturity. If the government want to extend, they will extend it. So what is this corridor from what is this date 8th April 20 to 24 months from this period? That means the particular scheme is still open. 24 months from this 8th of April 2020, this scheme was brought in. Now you see extended every 6 months. It's extended, the last extended up to 28th of April 2022. The scheme is still open. So what is this specialized in this scheme? If you are bringing investment, the minimum maturity 6 months, maximum maturity 1 year. You can have a 1 year deposit or 6 month deposit. You will be getting an additional 1% interest for 6 months deposit. Normal interest plus 1%. You will get 2% for 1 year deposits, right? All that minimum, you can see minimum 6 months deposit, maximum 12 months. SDA shall be open, maintain either in designated foreign currency or LKR account. You can see some of the benefit here. You can see here interest paid 6 months deposit, normal plus 1%. Interest paid for 12 months deposit, normal plus 2%, right? SDA could be used as a collateral guarantee loan. If they're keeping this special deposit with the bank, they can utilize these special deposit banks to take a loan from the bank for the account holders' purposes. For the depositors want to lay, they can keep the deposit and take a loan. So this is can be rupee deposit or can be foreign currency deposit, but they pay 2%. So most of the people prefer to have a foreign currency deposit and SDA. AD may be continued to SDA open under the regulation. Yes, special deposit account in domestic banking until the maturity date. They can continue to open this account. They must ensure these are all inward remittances exclusively for this purpose. So what happens? Some of the exporters try to get this benefit, bringing the export proceeds into this account. So that is not the case. That is export proceeds. You can keep it to your normal rupee account or your business foreign currency account because they want to enjoy the additional interest. Therefore, they try to bring the export proceed into this account. So for them to get the additional interest. So that should not be promoted. So the bank has, central bank has told banks to be careful. If it is if the regular payment of export proceeds or some sale of whatever, that should not be putting into this SDA. That should be refrained from that, right? Permitted credit, yeah, inward remittance in foreign currency received outside Sri Lanka, it has to be inward remittances, yes. Transfer from inward investment account or account maintained in offshore bank unit, yes. You can transfer from inward investment account or offshore banking account. Again, you can see 24 months from the period is bolded, it's still valid. Foreign exchange legitimate required brought into the account holder. Yeah, from the 1st of January 2020, they give the permission. If anybody coming after 1st of January, if they have brought some money legitimately, they can deposit into this account. Foreign currency note in possession of any person resident Sri Lanka up to such limit subject to, anybody holding foreign currency, even they can go to the bank and deposit under ST because they want the money to coming into the banking channel. That is the motive, right? Outward remittance maturity upon the maturity. So once the maturity is over, you can send the money out. Transfer maturity proceeds STA from the term deposit to an inward investment account, or once the inward investment money coming into SDA, once it maturity, you can transfer back to inward or offshore account, right? Transfer maturity proceeds, including interest SDA into personal foreign currency account of the same account holder, provided the SDA. So if you debit the Pfca and putting into SDA, then you can transfer back to SDA. That has to happen. Or disbursement in Sri Lanka and Sri Lanka rupee. Suppose say there is a Pfca account holder, he has the Pfc funds, he has to send the money to Pfc. From there, he can tell the bank to transfer to SDA because you're getting more interest. Once the maturity is over, SDA funds can go back to Pfca funds. That is possible. Okay, question time. I think we some other try to manage it. Question time. Shall we go through quickly? Question number 1. All Sri Lanka rupee account maintained by the immigrant who expect to leave Sri Lanka for the purpose of permanently settling country shall be read. All Sri Lankan rupee account maintained by immigrant. All account to be converted at what account? What is the answer? Can anybody quickly? You know that. All Sri Lankan rupee account, when an immigrant going, what is the account? Is it a CTR or NRRA? You know the account, right? NRRA. Right. Mrs. Esperera, who is intending to migrate to Australia, has opened CTRA with the Bank of Ceylon. And he is also making a request to open immigrant remittable income area with Ceylon Bank. In connection with the above request, which is the correct statement? He opened a CTRA with Bank of Ceylon. Now he is coming and asking Ceylon to open a area. So is it possible area could be opened with Ceylon Bank? Is it correct? No. Area can only be opened with the Bank of Ceylon. Area could be opened with any bank other than Bank of Ceylon. Is not eligible. Yeah, what is the answer? Area can only be opened with Bank of Ceylon, because if you have opened a CTR with Bank of Ceylon, area also to be opened with the same bank. So answer is area can only be opened with Bank of Ceylon. Right. That is the answer. Right. Question number 3. Remitting eligible migration allowance have been reduced and limited as per the current regulation during the effective period of the order issued. An immigrant who are claiming their migration allowance for the first time under general permission limited to how much? A maximum 10,000 or equivalent, a maximum 20,000 or equivalent, a maximum 30,000 or equivalent. What is the answer? First time migration, 30,000, right? What is the name of the Rupee account which could be opened by a firm or a company established incorporated outside Sri Lanka? What is the name of the Rupee account which could be opened? A Rupee current account and non-resident Rupee account, inward investment account, a company incorporated outside Sri Lanka, it has to be non-resident Rupee account. You know that, right? NRRA. Who is eligible to open external commercial borrowing account? What is the specific purpose? This is a direct question. No, you need to answer. Who is eligible to open external commercial borrowing account? Yes, companies incorporated in Sri Lanka. Company incorporated in Sri Lanka. Eligible to open. Company incorporated in Sri Lanka can open. What is the specific purpose? To facilitate the what is the purpose? To facilitate the what is the purpose? To facilitate the permitted to facilitate the permitted to facilitate the permitted to facilitate you can say to facilitate the permitted borrower to facilitate the permitted borrower to credit the loan proceeds to facilitate the permitted borrower to credit the loan proceeds to credit the loan proceeds and utilize such proceeds for the required transaction right? Case study quickly. Mr. and Mrs. Fernando obtained a permanent migration visa. Mr. and Mrs. Fernando have obtained permanent migration visas to migrate to Canada, and they are in the process of finalizing their banking transaction. Mr. and Mrs. Fernando have obtained permanent migration visa to migrate to Canada, and they are in the process of finalizing their banking transaction. They approach your bank to find out the responses to the following inquiries. What are the type of bank account involved in relation to migration? What are the answer? What are the type of bank account? What are the types of bank account involved in relation to migration? CTRA, NRRA, ERIA. The answer is CTRA, capital transaction Rupee account, non-resident Rupee account, NRRA, then ERIA, Immigrants Remittable Income Account, ERIA. CTRA, NRRA, ERIA. Second question, what are the entitlements for immigrant with regard to migration allowance? What are the entitlements for immigrant with regard to migration allowance? You can say initial migration allowance per person $200,000 is equivalent. Initial migration allowance $200,000 or is equivalent per person. Initial migration allowance $2,000 or is equivalent per person. Annual migration allowance 30,000 per annum. Within bracket you have to say subject to utilization, subject to utilization of initial migration, subject to utilization of initial migration allowance, and lapse of 12 months, and lapse of 12 months, and lapse of 12 months. Subject to utilization of initial migration allowance and lapse of 12 months. So the annual migration allowance start after 12 months, right? After taking the entire contract. Then if you want, you can also say what are the entitlement immigrant with regard to migration allowance. So you can say temporary resident, temporary visa, $30,000, right? Those are the three you learn, right? Temporary resident visa, $30,000 or equivalent. Are there any restriction imposed by IBSL currently on a permitted? Yes, currently, yes. What is that currently? You can say currently, what are the restrictions brought by them? First time migration, 30,000. First time migration, $30,000 it's equivalent. First time migration, 30,000. Then US dollar 10,000. US dollars 10,000 it's equivalent. For immigrant already migrated. For immigrant already migrated. For immigrant already migrated. And US dollar 20,000 for temporary residents. US dollars 20,000 for temporary resident. Temporary resident. Then US dollar 10,000. US dollar 10,000 when a TR holder leaving the country. US dollar 10,000 when the TR holder leaving the country. Apart from the, what are the other restrictions? So also you can say current income restricted to $30,000. Current income restricted to $30,000. Current income restricted to $30,000. Okay. What are the documents required to remit the migration allowance? You know that entire documents is there. Tax clearance, you important documents, right? Tax clearance, PR, permanent resident visa, source of funds, affidavit, application, one-way ticket, passport personal data page. So those are important requirements, right? What are the options available to remit the transfer or to remit or transfer the eligible migration allowance? What are the options available to remit, transfer the eligible migration allowance? What are the options? What are the options you have? You can say to remit outside Sri Lanka, to remit outside Sri Lanka, to remit outside Sri Lanka to immigrant account, to remit outside Sri Lanka to immigrant account, to remit outside Sri Lanka to immigrant account. Then to transfer to the PFC account of the immigrant. Transfer to PFC account, transfer to PFCA, you can write stroke. Transfer to PFCA, IIA, transfer to PFCA stroke IIA or of your OBU account of the OBU of the immigrant account. Transfer to PFCA stroke IIA or OBU of the immigrant account, OBU of the immigrant account. I think we managed to finish the session, right? I think about extra few minutes, right? So I think we will have one more session. I don't think we can need to go to 8th session. I told them I can complete by whatever area not covered in the foreign exchange regulation. All those left areas will be covered in the next session. That will be the last session, right? So I will meet you in next Saturday. Okay then, see you.